Assalamualaikum, Mr. Habib Ahmed.
Yes,
Um,
welcome. Salam.
yeah. Would you like to start now or wait more participants to join?
I can wait a few minutes. It's fine.
Okay. Okay, ladies and gentlemen, as Professor Habib Ahmed has said, we will wait for more participants to join. So please give reminder to other participants. We will wait for 2 minutes more. Thank you. Okay, now let's begin our agenda. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Peace be upon you. Alhamdulillahirabbil alamin. First and foremost, all praise and thanks are due to Allah, the great and almighty, which of course with all his power we can meet again virtually today. Secondly, salawat and salam be upon our Prophet Muhammad and all his families and companions, including us as his followers, who um, who were the most worried about by the Prophet, even on his last day in his world in this world. Indeed, only his shafa'at can save us on the day of resurrection. Ladies and gentlemen, I didn't feel it like it's been a week. We have followed a series of lecture of this program. Tomorrow will be our final session. Thank you for attending the entire session until today. Hopefully, without much trouble, we will all be given the ease in attending all sessions of this program until tomorrow. Please let me introduce myself. My name is Hafilda Rashifa, and today I will be your master of ceremony who will guide you during all lectures today. Please be kind upon me, as I may have made many mistakes. Thank you. Ladies and gentlemen, the first lecture for today's agenda will talk about the role of Islamic microfinance for the welfare of society. Our lecturer for this session is a professor and subject chair of Islamic Law and Finance at Durham University. Previously, he worked at the National Commercial Bank and Islamic Research and Training Institute, or IRTI, or of the Islamic Development Bank, IESWC, Group in Saudi Arabia. He is authored and edited more than 65 publications, including articles in international referred journals, books, and other academic papers or monographs. His expertise in today's topic is manifested in his various research and publications, including outreach and profitability trade-off, thus synergy between Islamic banking and Islamic microfinance institution matter in 2015, and why is growth of Islamic microfinance lower than its conventional counterparts in Indonesia in 2013, organizational models of Islamic microfinance in 2012, and so on. Without further ado, ladies and gentlemen, brother and sister, please welcome Professor Habib Ahmed. Assalamualaikum, Professor.
Walaikum salam.
How have you been?
Alhamdulillah, very good. I hope everybody is well too.
Okay, Alhamdulillah. We are very honored to have you with us today, Professor. Okay, before we continue, Professor, for Q&A session, how would you like to do? Can all participants ask questions in the middle of your presentation or at the end of your presentation?
I think if there are some questions to clarify what I'm saying, they can ask clarifying questions when I'm speaking. I think we will have hopefully some time towards the end for more specific questions or general questions.
Okay, maybe better in the end of your presentation, right?
I mean, as I said, if there's some clarifying questions about the lecture, they can ask. Otherwise, I'll prefer to have most of the questions towards the end so that we can complete the lecture and then have time for questions towards the end.
Okay. Okay, thank you, Professor. Wait a minute. Okay, ladies and gentlemen, as Professor Ahmed has said, all participants are allowed to ask questions in the middle of his presentation. However, to keep the fair in order and conducive, please raise your hand first before asking. Thank you. Okay, ladies and gentlemen, without further ado, let's begin our first lecture to Professor Habib Ahmed. The time and screen is yours.
Okay, thank you very much. Bismillah ar-Rahman ar-Rahim. Assalamu alaikum and a very good day to everyone. I see there are 52 participants now, including myself, of course. So what I'm going to do is, let me just focus on the presentation. As you see, the title of the presentation is Current Issues in Islamic Microfinance, Outreach, Sustainability, and Organizational Formats. So what I'm going to cover in today's lecture is broadly can be divided into two parts. In the first part, basically build up the conceptual and theoretical basis of the lecture in terms of first introducing what microfinance and financial inclusion is, and then talk about trade-off between outreach and sustainability. And we will look at this by looking at some of the economics of microfinancing. And after doing this, we will, in the second part, look at some organizational models and examine the outreach and sustainability features of these organizational models. And we'll be covering microfinance institutions, Islamic banks, and nonprofit organizations, and basically see how outreach and sustainability features are tackled in these organizational types. So moving on to the introduction, uh, uh, I mean, microfinance is very well known nowadays, especially in development circles. But it actually started in a formal way in the 1970s. Before that, the development models were focused more on the top-down kind of approach, where the policies of industrialization and the different growth models, which basically predicted in terms of more investment at the macro level, would trickle down to the bottom. But experience showed that over the 1950s, 60s, these models were not very successful. These top-down models were not very successful in alleviating poverty. So in the 1970s, as we will see, the microfinance was formally instituted as a development policy, recognizing that providing financial services to the poor is one of the key ways in which poverty can be alleviated. And it's a bottom-up approach because you are looking at providing financing to one household at a time. So you're targeting the very micro unit of a society. Now, of course, in theory, it holds true that if you want to, one of the ways to deal with poverty alleviation is to provide micro financial services to the poor. But the problem is that a lot of financial institutions, especially banks, they are not keen to provide financing to the poor. So we have this financial exclusion because of two reasons. One is involuntary due to economic and social reasons. So even if the poor want to get financing from the institutions are not willing to provide them with the financing. And this is because of, as I said, economic and social reasons. One is they have, most of the poor, they have low income. They are very risky because they don't have any track record. Uh, the, the banks do not have any information on their background, so the credit risk is very high. So because of these economic reasons, they do not have a good collateral. So because of these reasons, the formal institutions, especially banks, they are not willing to finance the poor. So here the financial exclusion is involuntary. The poor, they want the financing, but the financial institutions are not providing them with the services. And then we have a category of voluntary financial exclusion, and this arises from cultural and religious reasons. So you may have in some countries microfinance institutions operating now providing financial services to everyone, but some people may select not to engage with these microfinance institutions because, say, religious convictions. And this actually applies to Muslims because, as you know, riba is prohibited. And Muslims, a lot of Muslims would not like to engage with interest-based dealings. So here, even though services are available, the people, they voluntarily, in some ways, decide not to avail these services. So when we're talking about uh, uh, financial services as a tool of poverty alleviation, in Muslim countries, the financial services has to be Sharia compliant. Otherwise, the problem of financial exclusion will not, in some ways, be solved. And that's why when we talk about Islamic finance in general and Islamic microfinance in particular, it is a development issue. It is not a religious issue. It is a development issue. And the provision of Islamic financial services in some ways becomes a development, in some ways, program. Now, this is taken from a global Findex database. And before I go into, just to give you an idea, the ones which I've rounded up here is on the right side of both graphs is OIC average. So this is the average of OIC member countries. You have on the left side, we're looking at financial institution account. We see this is the world average. So the OIC average is actually lower than world average. It is a little bit better than low income group, but as you see overall, the OIC average is much less. The blue line here shows the total population in terms of people over 15 years and over. The red line shows the bottom 40% of the population. So definitely this reflects the financial exclusion. The green line shows the top 60%. And similarly, here we see people who have borrowed from a financial institution. For the OIC average is again lower than the world average. And only 9% of the population over 15 years have availed financing from a financial institution. When it comes to the bottom 40% of the population, it's 7%, and 60% is 10%. The key thing here is, as we see, the Muslim country, the world, or the OIC member countries, the average is small, and this in some ways may be reflecting the voluntary, part of it may be reflecting the voluntary financial exclusion. So a lot of Muslims may not be comfortable engaging with conventional financial institutions. Okay, so now trying to relate poverty and finance. We have, when microfinance, actually microfinance started as microcredit. So it was microcredit institutions which were providing loans to the poor. As I said, formally started in 1970s. Of course, we had cooperatives and those operating before 1970s, but their scale was very small and limited to very local areas. The idea is that when you giving fund or the financing to the poor, they use it in some productive activity, and they increase their income. Poverty is defined as income before a poverty line. So once the income is increased above the poverty line, you move the family or the household above the poverty line. So this is the idea of the 1970s, that you provide microcredit, and over successive years they increase their income, and the increase moves above the income level. But in reality, and we can see this now, especially under the COVID, that the real life is not very normal and certain. There's a lot of uncertainties which most people face, and whenever there is an uncertain event, the poor, they suffer the more. And what happens is, if you look at in a dynamic context in the future, there may be some negative shocks in the economy. So a person who has increased the income level above the poverty line, when this negative shock hits, he's dropped back again into poverty. So the dynamic view is not to only provide credit or loans, but actually to provide other financial services, including insurance, so that not only the poorer households, they can increase their income, but also they can protect themselves against the negative shocks. So the key thing is that when we're thinking of well-being in a long-term dynamic sense, we have to think in terms of providing all financial services, which includes financing, includes payment services, includes insurance services. So the paradigm shift has moved from microcredit to what we call inclusive finance. And inclusive finance basically is to expand financial services to the poor that increases the income level and also reduces their vulnerability. And I think, as I said, the COVID-19 has shown the issue about resilience and how to reduce vulnerability. So this requires new thinking in terms of how to deal with negative shocks and how to make systems and households more resilient to shocks. Uh, Again, this would be, as I said, much more broader than just providing credit. Having said that, this lecture basically is about providing financing. We cannot cover all the services like micro takaful or micro insurance and issues about savings and those things. So still the focus of this lecture will be on microfinance. But as an introduction, I just wanted to make this point that when you talk about this inclusive finance, we're talking about other financial services beyond financing. Okay, so now let's move on to the economics of microfinance. On the revenue side, uh, the key problem with financing the poorer households is the credit risk. As I mentioned, they, because the household is poor, they don't have any acceptable collateral, and this part, by the way, is more conventional than Islamic. The second part we'll talk about the Islamic. So traditionally, banks, when they give out any financing or loan, they usually would require, because a debt-based contract, a collateral or some kind of guarantee. And because the poor, they don't have the collateral, or people who they know are poor, they cannot be guarantors. So that itself makes them disqualified to get a loan from a conventional uh, uh, banking institution. The other problem is, of course, asymmetric information. One of the key issues or the determinants of financing is about information. Now, because the poor, they don't have any track record in terms of no credit history. They have not borrowed money, so they don't know what is their income level and things like that. Because of this lack of information on the status, the credit quality of the household, it becomes very difficult for banks to, in some ways, give out loans. So on the revenue side, they would not give loans to the very poor because the credit risk is very high. Similarly, on the cost side, as we know, most of the microfinance institutions, they start out small, so the costs of operations are very high. They have, of course, if you are starting a microfinance institution, you have to have an office. If you expand a bit, then you have to have different branches, and all of these involve fixed costs. And if you become very large, then of course you have a head office, regional office, and branches office, and that makes the fixed costs very high. And of course, the other issue is microfinance operations are very labor intensive, because you're dealing with hundreds of households with very low income, so you have to deal with them individually. Yes? Is there any question?
No,
So
doctor.
Professor, your voice is not louder. I'm sorry, Professor.
Okay. I will. Is it better now?
Again, Professor?
Is it better now?
Okay. Okay. Thank you,
Okay.
Professor.
Yeah.
There's no sound.
Okay. So the variable cost is also high because, as I said, it's very labor intensive. And as we will see in case of example, we'll see in Grameen Bank, they deal with the hundreds of households.
Okay. Professor.
Yes.
Okay, let me. Okay, Professor, your sound is not clear enough.
I don't know what I can do because I'm
Okay.
speaking in the.
Yeah, now better. Okay,
Okay.
thank you. Okay.
Okay, so the main thing here is that the costs of operations, because they deal with very small clients and hundreds of and thousands of clients, the cost of operations in terms of variable costs are also very high. And the other is, of course, is because they deal with very small amounts, the cost of delivery of services is high, because the issue is when you're dealing with a customer and giving them $100 or $200, there's a fixed cost in terms of arranging the contract and dealing with the clients in terms of the time spent. And the return you get on, say, $200, even $500, even if the rate of return is 20%, is very small compared to a bank which deals with a large client, say, giving $1 million, and even 5% would be a huge return. So the cost of delivering microfinance services is high. And initially, there were some studies which were done on microfinance service providing. And those studies found that the costs range from 24% to 400% per dollar lent. So if you're giving out $1 or $100, the cost may be from $24 to $400 for that $100 which is lent out. Again, these are some estimates. The cost will be higher the smaller the microfinance institution is. As the microfinance institutions goes larger, there's economies of scale, and of course the costs drop down. So these are some of the issues which basically implies that the poorer the household, the more difficult is to sustain microfinance activities, because the costs increase significantly and your revenues are relatively small per client. So in the economics of it says the microfinance institutions who want to target the poorer household, they can only do it if they can subsidize their activities somehow. If they want to be sustainable, then they have to actually target the relatively non-poor or households which are relatively better off, but not the core poor. And this is what I mentioned here in the next slide, that there is a trade-off between what we call outreach and sustainability. Outreach is basically can be defined in different ways. Actually, there are 4 definitions of outreach. Here I have used 2 definitions. One is the breadth of outreach, which basically is the number of clients served. It basically shows the scale of operation. And the depth of outreach is the numbers of poor people served. And what we are interested in microfinance is both breadth, but most importantly, the depth, that how many poor people have been served. Now, because of the economics of microfinance, there's a trade-off. So if you want to target the very poor in terms of the outreach, in terms of depth, then sustainability becomes a problem, and because the costs are very high to finance the very poor. So if you want to focus on sustainability, that means you cannot target the core poor. You have to target the relatively well off and give them a higher amount of financing. And actually, one of the variables which is used to identify whether the depth of outreach, whether microfinance institutions are providing financing to the poor or not, is the average loan amount given by a microfinance institution. So if the average loan amount is given is say $100 versus another microfinance institution where the average is $1,000, then of course we can conclude that the first microfinance institution is targeting the relatively poor. And given of this trade-off between outreach and sustainability, we have 2 broad approaches in literature related to microfinance. One is the poverty approach, which basically focuses on outreach. So these are institutions which are have social motives and are created because they want to create a social impact. But these organizations, they usually depend on subsidies. And this approach is usually carried out by non-profit organizations. And then you have the commercial approach, where the sustainable and these organizations are sustainable and self-sufficient. And because they're sustainable, that implies that they are serving not the core poor, but relatively poor or the non-poor. And these are provided by for-profit organizations. Now, what happens in in reality is a lot of microfinance institutions, they start with the poverty approach, and then gradually, because of economic pressures, they want to be sustainable, they move towards the commercial approach. And this in literature is sometimes called the mission drift. So you have a mission drift from social impact to becoming more sustainable and looking at the economic sustainability. So given this background, we can see that in terms of organizations, as you see, this is taken from reference. This paper is actually on Indonesia. And you see here we have the low households income. So low income households versus the core poor.
Ada kelas nih.
Is there a question?
Kenapa emang ya toh?
Can you mute your microphone, please? Yeah. So here we see that the core poor, as we move up, the income level of the household increases. So we move up here. There's still low-income households, but they're relatively, the income is higher. On this side, we see the commercial versus subsidized. So these organizations, they are commercially viable, meaning they can earn a profit. They cannot, they're not dependent on subsidies. But on this side, that means that the costs are very high, and the revenues are not. So these organizations, they have to be subsidized, either from donations or through government programs. So here we see commercial banks are here on the top. Commercial banks which are involved with microfinancing, they will target relatively households which have relatively higher income. Then this is BPRS, I think rural banks in Indonesia. As I said, this is taken from a paper which is on Indonesia. So these are rural banks. So they are relatively commercial wise, they are similar to commercial banks, but they would target households which are relatively at a lower income level. Then we have microfinance institutions. They are also commercially viable, but targeting the poor, relatively poor. Then when we see that the income is very poor, here we are talking about non-profit organizations. In this case, non-profit organization is commercially viable, not because it's closer to this axis, not very much, but at least it's surviving, but it is serving the relatively poor. Then we have here non-profit organizations which are serving the poor here, but they are not generating enough revenue, so they are subsidized. And then finally, we have the very core poor, they are served by the government poverty reduction program. So in some ways, you have an idea that when it comes to the trade-off between outreach and sustainability, we have these different organizational structures and models, which basically gives you different combinations of outreach and sustainability. So given this framework, what I'm going to do next is go over microfinance institution example, Grameen Bank. Grameen Bank is one of the most, what should I say, one of the first microfinance institutions which became a huge organization and is used as one of the most, the first experiments to expand microfinance services to a large scale of the population. And because of this contribution, I think most of you know Dr. Mohammed Yunus, who created Grameen Bank, and he basically got a Nobel Prize for his contribution. And this part of the presentation is basically on Grameen Bank, and I will use Grameen Bank as a sample in terms of how microfinance institutions can operate. So microfinance institutions are poverty-focused institutions, which means what? that if you are not poor, you cannot get services from the microfinance institutions. Actually, for example, in Grameen Bank, when they are screening the clients, one of the conditions is you cannot have land over, say, half acre of land, or in your income cannot be above a certain level. So if your income is above a certain level, or you have more land than, say, half acre, then you are not qualified to get financing from Grameen Bank. So as you see, it is a very different model. It is poverty focused, and the clients are the poor households. The target group are micro and small households and enterprises. And of course, depending on different countries, the the financing amount will be different. For example, average financing in Bangladesh is under $200, and microfinance institutions in operating in America, the financing is $1,500. Now, by the way, Grameen Bank has not a brand, I mean, a similar model in America, which is structured like the Grameen Bank model. And there the financing average is $1,500. The theory of change in Grameen Bank model is that you have households with low income, give them credit, which is invested in productive activities. This investment will lead to income. And then you give another round of credit, which is again invested, and more income. And through this process of successive credit over the years, the household will basically improve the income levels and move above the poverty line. So this was the initial model or the thought behind the microfinance institution. As I mentioned, there are different models. For example, in Indonesia, you have Baitul Mal wa Tamfil, which is very different than the Grameen Bank model. And then we'll talk about Akhwat, microfinance institution in Pakistan. It also has a different model. So now, the Grameen Bank model in some ways is interesting because, as we will see, it takes care of the collateral issue in a different way. Because as we mentioned, one of the key problems of micro enterprises and the poor households is they do not have a good collateral against which financing can be provided. Now, what Grameen Bank model does is, if you want to take financing from Grameen Bank, you have to basically form a group of 5 people. So interested individuals, they form a group of 5 people, and several groups form a center, and the center has weekly meetings. So what happens here is that staff of the bank, he or she actually goes to these weekly meetings in the center, and all the banking transactions takes place in these weekly meetings. So instead of the client coming to the bank actually goes to the clients. And this is very helpful for the clients, because they don't have to use a lot of time to go to the, if there are 100 clients, instead of 100 people walking to the branch, one person, one staff from the bank goes there and meets them in their locality. So an official from the microfinance institution attends the meetings, and all transactions takes place in these meetings. Now, small amounts of funds are given to micro enterprises, ranging from 3 months to 1 year. Usually it is 1 year. So 1 year you have 52 weeks. So when financing is given, this financing is paid back in 1 year in 50 weekly installments. And these installments are basically paid in these weekly meetings. The capital and interest paid back in small weekly installments. And it is actually, this is one of the interesting features of the Grameen Bank model. When you are paying back small installments, weekly installments, it is easier for the poor to pay small amounts of money than paying a lump sum at the end of the year. There are 4 savings and insurance programs in the program, and then we have social development programs also, like Grameen Bank members, they have to know how to, or they have to send their kids to school. They have to have clean houses. So these are part of the social development programs which Grameen Bank institutes. Okay, so this is a structure. You have different members who form a group, different groups forming a center. Now, the innovation of Grameen Bank, as I mentioned, is that there's no requirement of physical collateral, but the way it works is that when financing is given to, say, one member, and if that member defaults, then all these members become disqualified to get a loan. Now, because these people, they really need the loan, they put pressure on each other so that they can repay their weekly installments on time. So instead of a physical collateral, there's in some ways a social collateral which is created through peer pressure. Sometimes, of course, this is criticized, the peer pressure is done excessively, but the key thing is that this model has solved the problem of credit risk by creating this social collateral where members, they each help each other sometimes and put pressure on them so that they can repay their weekly installments. And as a result, what happens is the repayment rate of Grameen Bank is extremely good. I think it is usually above 98, sometimes 99%. I didn't show the numbers here, but they have been successful in terms of getting their loans repaid. So this is the model. So basically, it is a group which creates the peer pressure and acts as a social collateral, resulting in very high repayment rates. And as you see, this is in some ways an interesting innovation in financing. So let's move on to the Islamic microfinance approaches. I'm aware of the time, so let's try to move forward. Okay, now Islamic finance and financial inclusion. Before I go to the organizational types, just some introductory remarks that Islamic finance, is when it was first discussed, it was discussed as a part of the Islamic economic system. And the Islamic economies, they talked about a Islamic economic system that will both have equity and growth, and not only just focus on efficiency, but also the overall social welfare of all the segments of the population. They talked about the overall objective of Sharia and referring to this maxim, legal maxim, which says the overall objective of Sharia is that of promotion of human welfare and prevention of harm and evil. So this principle should be reflected in all the economic system and the financial system. So the implication of this overall objective or maqasid al-Sharia would be that the Islamic financial sector would provide financial services to all segments of the population, and that will promote both growth and equity. Of course, in the capitalist system, we see that the growth is not a problem, but equity is a problem. There's a huge growth over time, most of the benefits of this growth basically accrues to the top 10% on 1%. And an Islamic economic system, if it is implemented properly, Islamic economists claim that they will solve this, this dichotomy between growth and equity. Now, of course, the practice of Islamic finance shows that it has not contributed very much to financial inclusion. If you're talking about Islamic banks, which is the largest segment of this industry, 72% of the industry, not too many Islamic banks have microfinance programs. A CGAP study in 2013 shows that Islamic microfinance covers less than 1% of the total microfinance outreach, which is basically the same as Islamic banking. Islamic banking is also 1% of the global, I think, or the Islamic financial industry is 1% of the global financial industry. So microfinance is also 1%. So we see that the Islamic finance has not contributed anything different than what the conventional finance has contributed to finance the poor and the micro enterprises. And this again is taken from the same study. It is a survey, one of the few surveys which shows the types of institutions and the clients they serve. So as you see, the village rural banks, the total number of microfinance institutions in this survey were 255. 77% of these institutions were village and rural banks. 1.2 million clients served by these microfinance institutions, 16% of these were served by the village and rural banks, and so on. The key interesting thing here is commercial banks, they are only 3% of this 255 microfinance institutions, Islamic microfinance institutions, but they serve 60% of the client outreach. Now, what I have here on the last column here is the scale effectiveness, which is basically dividing this percentage by the clients. How much, showing basically how many institutions serve what percentage of clients. So as you see, the scale effectiveness of commercial banks is the highest, is 20. And when it comes to rural banks, when it comes to non-bank financial institutions, NGOs, their scale effectiveness is relatively small. The cooperatives is even small. It is only 0.25%. So the commercial banks, they have the advantage of scale, but only 3% of these institutions are commercial banks. So this is just to give you a flavor of the different organizational formats, because this is one of the themes which we are going to cover in the next few minutes. Okay, so let's look at three types of organizations: Islamic microfinance institutions, Islamic banks, and a non-profit organization, and look at what are the outreach and sustainability features of these organizations. As you know, Islamic microfinance institutions, they can retain the operational formats of conventional microfinance institutions in terms of, for example, if they're doing group-based lending, like Grameen Bank, from an Islamic point of view, there's nothing wrong to do that. So a lot of Islamic microfinance institutions, they also use group-based lending so that they can use the group as social collateral. So you can have group center formations going to clients. All these operational structures of the conventional can be used in Islamic microfinance institutions. Islamic microfinance institutions, of course, will be different in terms of the sources of funds and uses of funds. The sources of funds, other than external sources, they can also use funds from charities. One of the actually constraints of Islamic microfinance institutions is that a lot of the sources of funds are interest-based. So Islamic microfinance institutions are limited because when it comes to provision of Sharia compliant sources of funds, we don't see too much out there. Also, of course, the other difference, of course, is the use of funds in terms of the modes of financing used to finance the poor households and micro enterprises. We know that can be broadly classified as sale-based or leasing modes, the debt-based structures of Murabaha Salam, and Ijara-based financing. And of course, in theory, we can also think of profit-sharing modes of financing like Musharaka and Mudaraba. Now, if we look at the outreach and sustainability of Islamic microfinance institutions, of course, because they are Islamic microfinance institutions, they focus on the poor, assuming that they are using, the poverty-focused approach. So being poverty-focused provides financial services to the poor, and actually, some studies do show that Islamic microfinance institutions, they do provide financing to the poor. Maybe not the core poor, but relatively poor households. In terms of breadth, in most cases, the scale of operation is relatively small. And we also saw the scale of operations in the figure in the table here, where we see that the microfinance institutions, the scale in terms of the number of clients they serve is relatively small. In terms of sustainability, the credit risk is mitigated by social collateral, group-based lending. but they still have high costs. So economic viability can be an issue. They may be making enough revenue to survive, but of course, sustainability, it can be an issue. And this is also a problem in conventional microfinance institutions. So when it comes to outreach and sustainability, I think the conclusions are similar to microfinance institutions. They will be good in outreach, but sustainability may be an issue. So microfinance institutions have resolved the outreach problem, but the scale of operations and sustainability probably are issues. Another thing I just want to mention quickly is a few problems which Islamic microfinance institutions face include dilution of application of modes of financing. Now, it is very difficult at the microfinance level to actually apply Islamic modes of finance. Even the basic murabaha, it is very difficult because what you are dealing with hundreds of clients who need different things. So you're giving somebody, somebody has a shop and he wants to buy inputs for the shop so he can sell. So it's very difficult for microfinance institution to buy all those and sell it to them physically. Somebody wants to buy a cow, it's very difficult for the microfinance institution to go to the market, and even if you make an agent, so it becomes very difficult to actually implement Islamic microfinance modes of financing at the very micro level. And I just want to make another point, even though we see some papers saying that mudaraba and musharaka can be used at microfinance institutions. In theory, yes, but in practice, it's very, very difficult, partly because the poor households, a lot of them are financially not literate. They cannot keep accounts separate from personal accounts and business accounts. So all of these problems makes it very difficult to actually, in some ways, use profit sharing modes of financing at the micro level. The other problem which I mentioned, most of the conventional microfinance institutions get funds from external sources. And these sources are sometimes actually development institutions like World Bank and even national development organizations. But these are provided at interest rates, which some Islamic microfinance institutions are reluctant to use. The other source of income is, of course, from charitable sources like zakah, waqf, and sadaqah, for example. But experience shows that this integration has not taken place to the extent which is possible. And the other thing is, most of the Islamic microfinance institutions are small and they are created by people who want to do well. But when you're talking about microfinance, it is a financial institution. You need the right skills, you need the right capabilities, and a lot of people working in these Islamic microfinance institutions, they actually lack the skills of running microfinance institutions. And this is also true for small scale conventional microfinance institutions. Okay, moving on to the Islamic banks. Now, of course, Islamic banks, if you look at the broader objectives of Sharia, and if Islamic banks actually fulfill those broader objectives, then they should also be providing financing to the poor. Now, the social role of Islamic banks should be, because their business is in financing, the way they can express their social role is by providing microfinance services to the poor households. So it's the Islamic finance basically is not only the legalistic compliance with the the contracts. It is much beyond that. We have to look at the impact of the financing, and this is where the maqasid perspectives comes in. And actually, there are some studies which have shown that if Islamic banks they in some way structure or integrate microfinance services in their practices, they can actually do it more efficiently than microfinance institutions. So but as we know that most Islamic banks have not been forthcoming with microfinance institutions. I say most, not all. I mean, we have a few cases where Islamic banks have taken initiatives to actually provide microfinancing. Now, the key thing here is, as we see the client, uh, the the clients of microfinancing are different than the traditional clients which the banks serve. So they have to deal with the micro enterprises differently compared to their regular clients. So what they can do is basically introduce the model which is used by microfinance institutions in their practices, and then they can provide microfinance institutions. And some of the Islamic banks which are doing microfinancing, they have a separate microfinance department, and the mode of operation of that microfinance department is very different than the regular banking department. And we will look at an example to basically show that. So basically, Islamic banks can use the same format as microfinance institutions because it suits the micro and small enterprises. It can open up a department for microfinance institutions, and the key thing is it can use the existing infrastructure, bank offices, to finance. So what this implication of this is that there is no extra cost in terms of physical assets, in terms of fixed assets. So basically, Islamic banks can use their existing infrastructure. So the cost of delivering the services reduces significantly compared to microfinance institutions. So given this, that because they use their existing infrastructure, the fixed costs which are incurred by the microfinance institutions, these are no extra costs for Islamic banks. So in that sense, Islamic banks can basically provide the financial services at a lower cost. So in terms of outreach and sustainability, the depth outreach in terms of serving the poor may not be good. Maybe they are serving relatively non-poor group because they are bank, they don't want to provide very small amounts. They provide financing to the relatively non-poor. The breadth, the scale of operation is very large because they can use the branch system, existing branch system, and basically cover people through those branches. When it comes to sustainability, revenue risk is mitigated by social collateral group lending. As I said, they can use the similar microfinance structures so that the credit risk is mitigated. And the interesting thing is that the costs will be much lower for Islamic banks because there's no extra cost needed to maintain offices. You basically, for each branch, you need an extra desk, which basically runs the microfinance program. And the lower variable cost at head offices, regional office, because you can actually benefit from the scale of operation. So the conclusion is, when we're talking about Islamic banks and microfinance institutions, Islamic banks appears to solve the problem related to sustainability because they basically can provide the services at a much lower cost than microfinance institutions, but they may have issues related to the depth of outreach. That maybe they're serving not the core poor, but people who are relatively well off. And finally, this is an example of a nonprofit organization which is based, this is Islamic Bank, an example of Islamic Bank which is doing microfinance. This is the RDS program, or Rural Development Program of Islamic Bank Bangladesh Limited. They started this RDS program in 1996, and this is funded by the Islamic Bank's General Investment Fund. So they don't have a separate fund. They're using basically the bank's fund for the microfinance program. RDS operates through 295 branches, covering 24,000 plus villages, and have served more than 1 million clients. And 1.2 million clients, and 92% of these clients are women. As you see, the recovery rate is 99.36%. And the rate of return charged by, this is the profit rate charged by Islamic Bank, is 12.5%. And actually, if the clients, they repay their debt back on time, they basically get a rebate of 2.5%. So their effective profit rate becomes 10%. So there's an incentive for the clients to actually to repay their debt back on time. And by the way, just to give you an example, Grameen Bank, which is the largest, one of the largest microfinance institutions in Bangladesh, it charges 16% interest rate. So if you see Bangladesh Islamic Bank Bangladesh Limited is providing services to the poor at a much lower cost. And it can do it because, as I said, its costs of delivery is much lower than Grameen Bank. Employees involved in RDS have better benefit packages, so they can hire good quality officers who know banking business. And also the employees, they get in-house training at the bank's training academy. So the key point here is that there's a strong case for Islamic banks to actually do microfinancing. The only thing is there has to be a will at the board of directors level to initiate this. The Islamic Bank Bangladesh Limited, they had decided the board decided that they'll go into microfinance. And they basically bought a person from Grameen Bank to start the Islamic microfinance program in the bank. And this person, he basically structured the microfinance program in Islamic Bank. It's very similar to the Grameen Bank model, but of course, the modes of financing used are Islamic. The example of a non-profit organization is an interesting example from Pakistan called Akhwat. It actually is a unique example. Akhwat gives interest-free loans to groups. Actually, it used to give in groups. They have eliminated the group-based structures and individuals with guarantee. So the groups have been phased out. The way it operates is that if a person wants loan from Akhwat, you must have two guarantors, two people who can guarantee the repayment. So individual must have two guarantors. And the interesting thing is these branches are operated through mosques and churches where loans are advanced. So if you're talking about giving a person loan in a masjid, so most likely that person attends the mosque, and most likely the two guarantors are also from the mosque who attend the mosque. So you have again a social capital which builds up here in terms of the person attending the mosque and the guarantors from the mosque, and that puts pressure on the person who's taking loan to repay the loan on time. There is no charges on loans, so it is interest free, Qard Hasan. Operational costs are covered from donations. So it's a different model. As you see, the operation cost is subsidized from the donations it receives. And as you see, the growth rate of this microfinance program is exponential, actually. If you look at the figure, December 2016, it has 569 branches. Amount disbursed was 33 billion rupees, and the recovery rate was 99.93%. And in 3 years' time, the branches increased from 569 to 811, and amount disbursed almost increased 3 times from 33 billion to 103 billion, and benefiting 3.8 million households, and the recovery rate is extremely good. So the key thing here is Akhwat's model challenges the deeply entrenched assumptions about economic behavior and microfinance models. The founder of this organization, Dr. Amjad Saqib, he says that when he goes, he's invited to a lot of different places to give talks because this is a very unique model. And people tell him that your model is not sustainable because you don't generate any revenue. And his answer is, okay, as they say, the taste of the thing is in the pudding. You basically look at the growth rate, and if you look at the growth rate, how can you say that this is not sustainable? It is actually expanding exponentially. The thing is, of course, this model is very good in outreach because it serves the very poor. And it is not sustainable in a sense that it is based on subsidies. But it is a model which is working, and we see growth in the operations of Akhwat. The final slide is basically to integrate Zakah Waqf in microfinance. I just want to say Zakat has some conditions. We cannot use Zakah for refinancing in terms of giving it out as loan credit, even Qard Hasan, and returning it back. One of the conditions of Zakat is that the ownership has to be transferred to the beneficiary. Now, I know that in Indonesia there are some views, and they are actually using Zakat in microfinancing with the interpretation that the Zakah is for the group of people, not individuals. So basically, the group of people benefits different people in the group, they benefit over time. But the general view is the Zakah has to be transferred to the beneficiary. Now, having said that, we can think of different models, but in terms of Waqf is flexible because the Waqf donor, whatever the intention or the purpose of the Waqf is mentioned in the Waqf deed, that will be applicable. So if the Waqf deed says that the returns or the Waqf itself will be used for microfinance institutions, that's perfectly okay. Now, we can think of different models, cash Waqf, where the cash itself is used as microfinance institutions. And this actually has been used in the past. In the Ottoman period, there was cash Waqf, which was given out as loans. But one of the conditions of Waqf is, of course, that you want to keep the corpus of the Waqf, the capital of the Waqf intact. So you have to take measures so that the capital does not get diluted. Then we can collect Waqf funds in terms of new instruments, Waqf certificates. You can have Qard Hasan deposits, etc. Within the structure. So you create a cash Waqf, and then others can contribute to this Waqf so that the capital increases and the scale of operation of microfinance increases. The other one is to create a microfinance institution based on Awqaf and Zakah. So the capital comes from Awqaf, for example, and then you can integrate Zakah you give for consumption purposes. Then you can target the core poor. One of the problems of financing the core poor is that when they get the funds from microfinance institutions, they use a part of it for consumption because of their dire necessities. So when they use parts of the fund for consumption, the amount which is left for investment becomes small, and it becomes very difficult for them to repay the loan. It becomes very burdensome. So if you combine Zakat and for consumption, and then give financing for productive activities, that can help the core poor who are usually not reachable by the microfinance institutions. And then, of course, we're talking about the linkage model where the Waqf, the returns, the Waqf can basically provide funding to the existing microfinance institutions. So you have microfinance institutions who need funds, and then the Waqf can provide, Waqf may have returns which is accumulated, then they can use those returns to provide funding to the existing microfinance institutions. Okay, in conclusion, we talk about different organizational formats. When we look at the commercial approach, we're talking about banks. They're strong in sustainability and scale, but not in outreach. But the other thing is we don't see too many Islamic banks coming forward to provide microfinance institutions. Poverty approach, these are usually non-profits or microfinance institutions. They're good in outreach. The problem is with sustainability. I put a question mark because in case of Akhwat, it doesn't generate any revenue, but it depends on donations to run the operations. New innovative models can be introduced, and Akhwat is one of those examples. Funding problem can be resolved by integrating Zakah and Waqf into the financial sector. And again, we don't see too much of this happening in Islamic finance. For example, Baitul Mal wa Tamwil actually has two components. Baitul Mal part is the charitable part, and Tamwil part is the financing part. Ideally, this should be integrated in financing. But what I understand is Baitul Mal part is separate from the Tamwil part. So the Baitul Mal part is used for charitable purposes, and Tamwil part is used for financing purposes. And the people in the two groups are different. But if they can be integrated together, then the core poor can be financed, uh, providing Baitul Mal for consumption and other support, and Tamwil part to uplift the poor, their economic situation. And Islamic microfinance is not only about, the key thing here is when we talk about Islamic microfinance, we have to think beyond banks. We have to think of non-profit, for-profit, non-bank financial institutions. And of course, nowadays with this fintech, we also can think of fintech type of organizations which can provide financial services to the poorer sections of the population using digital technology. Well, I have tried to finish it within an hour's time. We have, I think, some time for questions.
Okay, thank you very much, Professor Habib Ahmed. What have you delivered today has really opened our horizon about several issues in the implementation of Islamic microfinance. We are very fortunate to have listened to what you have explained in your presentation today. Professor, may Allah bless you. Okay, let's continue to Q&A session, Professor. As
Okay.
As you can see in the chat room, there are already plenty of questions. There are 5 questions now. And then, okay, ladies and gentlemen, for this Q&A sessions, I will give you the opportunity to ask Professor Ahmed directly. Maybe two questions from Brother Komardin. You can ask Professor Ahmed directly. Or anyone? Hello, Brother Komardin. Okay, maybe I will help you, Professor, to read the questions. Wait a second. Okay, from Brother Komardin. The questions is, please explain more about on Islamic Maqasid Sharia and capitalism in respect of MFI or MFIs. And then the second one, the questions is, sir, my second question is that can IB survive and attain Maqasid Sharia without the EMF model? Okay.
I didn't understand the second question, but the issue about Maqasid al-Sharia is, you know, the right way to put it is probably in this way. When we talk about economic transactions, there's a means and there's an end. The means are the contracts. The focus of Islamic banks is on the contracts. And when we talk about a maqasid means goals, which means they are about ends. So we focus on the means, but we don't consider the ends. From an Islamic point of view, we have to focus both on the means and the ends. And so you may have, for example, a Sharia compliant contract, which is funding travel, you know, or expensive cars and things like that. They are not fulfilling the social needs. So when we're talking about the maqasid, we basically try to see what are the impact of the financing. And because of the social orientation and the fact that other than the 5 maqasid, I mean, the basic principles of, you know, enhancing the maslaha and preventing the mafsada, if we just use this very basic principle, every financing should have a positive benefit, positive impact in the society. So I think this is a very concise way to in some ways explain the role of maqasid, which is basically to not only focus on in the means, but also look at the impact of financing and goals, whether it has a positive impact or a negative impact. And I didn't understand the second question actually, but if there are other questions, maybe we can move on to other questions. Whether Kamruddin can probably ask the question or clarify the question.
Assalamu alaikum, Prof.
Walaikum salam.
Please, my second question is that can Islamic banks survive and attain Maqasid Sharia without implementing any of the Sharia, Islamic product service such as Mudaraba, Muraba? That's
I think your voice has got. Did you understand the question? If you can explain me the question. Khalda, did you understand what he asked? Your voice is very cutting off, I think. Yeah.
Okay. Assalamu alaikum, Prof.
Walaikum salam.
My question is that can Islamic bank
Brother Komarudin, we cannot hear your voice.
Survive without any of the Islamic microfinance models? Assalamu alaikum.
Walaikum salam.
My question is that can Islamic banks operate and survive without implementing any of the Islamic microfinance models? That's my question, sir.
Any microfinance modes of financing?
Yes, sir. Yes, sir.
Well, if it is Islamic, it has to use the Islamic modes of financing, right? Now, the key issue is when you try to apply Islamic modes of financing at the micro level, it becomes very difficult. And what a lot of microfinance institutions do is actually try to resolve the problem by, in some ways, finding shortcuts. For example, as I mentioned, even doing murabaha, which is the bank should buy and sell it to the client. It's very difficult for the microfinance institution to go and buy these individual things and sell. Usually what they do is they give they ask the client to bring a friend in the group, for example, and they will make the friend the agent on behalf of the bank to buy the thing and deliver it to the client. Now, of course, when they walk out of the microfinance branch, the friend probably gives the money to the friend. So that's what I'm saying, that maybe the Islamic microfinance modes of financing are difficult to use at the microfinance institution. And what I mentioned was musharaka, mudaraba are very difficult because partly because the financial literacy, because to do mudaraba, musharaka, you must have accounts. At the end of the period, you have to see what is the profit. Then this is shared between microfinance and the client. But in most of the cases, if you see at least I've experienced in Bangladesh, the financial literacy is very, very poor. They don't know how to do accounts, keep accounts. Their personal accounts are mixed with businesses because they have a shop, and for example, whatever the profit is, they will use it for consumption the same day. And so it becomes very difficult due to these practical problems to use mudaraba and musharaka at that level. Okay, any other questions?
Okay. There are so many questions in chat rooms. Is there anyone to ask Mr. Professor Habib Ahmed directly? Or I will help to read the questions.
Okay, let me try to read some of the questions, and then there's a question from Rizeda. Assalamu alaikum. Are there any microfinance projects of IDB? You have a lecture by Dr. Obaidullah later today. He's from IDB. I think he's the best person to answer this. As far as I know, they have funds which provide, they have a fund which provides funding to microfinance organizations. My question is, since microfinance institutions serve the poor, credit risk will be high. How the institutions solve? And I think I've discussed that. One of the ways they solve it. The examples we saw is one way is to have groups where the one, if one person in the group defaults, all the other gets disqualified. So there's group pressure, which basically, and sometimes group members, they help each other to repay the loans back, because they know that if they don't pay the loans, they will not be able to get financing themselves. The other model we saw, Akhwat, they used two guarantors. And in both cases, we saw that the repayment rates have been extremely high. So there are different ways to do it. But the key thing is you have to bring in a social pressure somehow. In case of Grameen Bank, the pressure comes in the group. In case of Akhwat, there's a social capital built because you are dealing through mosque and you know people in the mosque. So there's a pressure built within the social capital, which helps repayment of loans. And the numbers speak for themselves. The repayment rate has been very, very high in both examples. The next question from Ramadani.
Oh yeah, Amanda, Professor Amanda Kumala.
Okay.
Yes.
You have a question?
From Amanda Kumala. Assalamualaikum, Professor Habib Ahmed. My question is, since the microfinance institutions is serve the poor, the credit risk will be high. How the institutions solve the problem of financing money that cannot be returned by customers, since it will affect their sustainability? Thank you.
Yeah, as I said, the credit risk is mitigated through group formation. One of the things which most of the microfinance do, and I didn't mention it because of the time, is when they collect these weekly repayments, installments, each member, they have to contribute a very small amount in basically a risk fund. It's a very small amount, but because it's paid every week and you have hundreds of people, actually this risk amount gets pretty large. So it's basically like a takaful fund. So if one of the members or the clients, they default, maybe person gets sick, or maybe there is some negative shock in terms of accident or something, then they will use the money from this risk fund to pay for the installments. So most of the microfinance institutions, including Grameen Bank, they have this risk fund, which is a pool which is used basically to cover the credit risk. But as I mentioned, the credit risk is mitigated through the group formation through guarantees. And in case, whenever there's a default, you can use the money from the risk fund. Okay, shall I go to the chat room and answer, or? Okay, why the most clients in microfinance institutions are women? Well, the women are better clients. From experience, they have found that women are better clients in two ways. One, you can find the women in meetings. They are more, because they usually men will go out and work. So when you have these weekly meetings, the women are usually there. By the way, when it comes to Islamic microfinance institutions, even though they give it to the woman, the contract has to be signed by both the husband and the wife. So it is a joint contract. They deal with the woman because it's easier to deal with the women in terms of attending the meetings. And the other reason, which is a very important reason, is when men, they make money, they actually spend it on themselves. When women make money, they spend it on the family, on the children and household. So in terms of social impact, I think women, they are better clients in that sense. And from experience, I said, it is easier to deal with women in this structure where you have weekly meetings and you have to, as a client, attend the meetings. The next question is from Ismail Ahmed.
Sure.
In a community where there is a greater number of zakah recipients and very less zakah funds, it's good to divert zakah funds and establish microfinance bank, empower the recipients instead of giving them meager amounts for consumption. Yes, of course, that's a very different discussion. I think the key issue is that we should try to give zakah in a way that makes the person productive, so that the person becomes zakah payers themselves eventually. And I just want to mention in Akhwat, the example we looked in Pakistan, where they give Qard Hasan loans or the interest-free loans. The most of these people who take the loans, they become donors themselves. And the Akhwat, they actually encourage them to donate even when they are paying. So when they come to the branch to pay for the dues, there's a donation box. They sometimes it's 1 cent, 2 cents, very small amount of money. They just put these donations in. For example, it may be 5,000 or maybe 1,000 rupiah wise, which is easy for the poor to pay. So when they come to give their monthly installments, they also put some money in the donation box. And that should be the spirit of zakah also, that instead of giving it for consumption. What I mentioned was for the core poor, you have to understand that when it comes to the dire necessities, first you have to survive, and then you can think of production. So for the core poor, sometimes problem is they don't even have enough to eat. For them, of course, they are the right person to receive the zakat. So with this zakat, if you combine it with microfinancing, which is which can be used in productive activities, you can basically complement zakat and microfinance to move the poor people out of poverty. And then we have
from Liatul Mutmainah. I will help you to read. Okay. So, Assalamualaikum Professor Habib Ahmed. I am Luli from Indonesia. Thanks for a great presentation that give us many explanation about IMF. My question is how the implementation of digitalization on IMF development in your country, and how to maintain the poor to become more productive through this IMF institution. I read the article that explains when women include this microfinance program and generate income, sometimes the family issues come out because the women in family should use their time also to work and cannot do with their families all the time. What's your opinion? Thank you.
As for the first question, in terms of digitalization, actually, I think digital or fintech provides a great opportunity for microfinance. See, one of the key issues in microfinance is most of the poor are living in remote areas and rural areas. So through digitalization, you basically reduce the spatial, or the barrier is not there anymore. You can reach any person if they have a mobile. Second, of course, is the cost. The cost of delivery, as we saw, is very high for microfinance. And actually, there are some studies which shows that if these services are provided digitally, you can reduce the cost up to 80%, for example. So the cost of delivery comes down. And third, of course, is the information. The information asymmetry also can be reduced. You not only use you use basically, as you are aware, a lot of this information which goes into the digital world can be used to basically assess the credit quality of clients. And now there is a microfinance institution which is actually headquartered in US, but they have operations in different countries. And they use, when you apply for microfinancing, of course you do it digitally. They will call you and they will ask you that we have to access your phone. I mean, that is a condition. So what they do is they access the phone, and from the information in their phone in terms of how many calls they've made, what are the text and those things, they can make a decision on the credit quality of the client. And they have been using it very successfully. So I think there is a lot of opportunities to provide microfinancing in a more efficient way in terms of lower costs, and to access and provide access to a larger group of people. So again, in theory, it's definitely, in terms of the women, of course, the issue is, uh, 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 I think initially this happens in a lot of societies. Usually the men, they are responsible for all of these the income generating activities. When women, they in some ways contribute to this, and there have been some cases, reports where you have issues within the families. But I think these problems have reduced. I mean, they still exist, but they have probably reduced quite a bit. But I was not sure in terms of the time work cannot. Actually, a lot of the work which women do are, they don't go out and work. They usually work within their household. They may be doing things in terms of microfinancing, for example, taking care of, the raising chicken and making these handicraft baskets and things like that. But of course, these problems are not only applicable for the poor, these are problems for all segments of the income. What is the role of the woman in a household? And I think it really differs from one culture to another. For example, in some African countries, women are working in the fields, and they basically work in the agriculture. The agriculture is basically carried out by the women. So I think it is a very, in some ways, culture specific, and it will be differ from country to country. Next question.
Okay, there is questions for Sabil Khairat in the middle of your presentation, Professor. The questions is, what is the purpose of the trade-off?
Well, this is not there's no purpose. This is a fact. I mean, the fact is, the poorer the household, the more expensive it gets to serve them. It is, it's a economic fact. Because the costs are higher, you become less sustainable. The example I gave, if you're giving $100 to someone, and even if their interest rate is 20%, you're getting $20, and you are doing all this work, the paperwork and going and collecting money, all the costs are incurred, but you're only getting 20 pounds or $20 in return. But if you're giving $1 million to a large client, if the rate of return is 10%, you're getting 100,000 US dollars in return, for example, right? So you're getting only $20. So the economics of financing leads to this trade-off. It's not a purpose. I mean, it's not done intentionally, but this is how, in some ways, the economics works.
Okay, thank you. Professor, we have 10 minutes to this Q&A sessions. And next questions from Novilia Aisyah. Okay, from Universitas Jember. Since we talk about microfinance, we always have the great role model from Grameen Bank system. Could you explain, is there any relevant example beside it according in contemporary era? Thank you.
No, I didn't understand the question. Please.
Okay, maybe Sister Novilia, will you ask the questions directly to Professor Habib? Hello, Sister Novilia. Okay, maybe we'll go to the next questions, Professor. From from Aulia Eka. Assalamualaikum, Professor. In Indonesia, there are some of Islamic microfinancing firm by cooperation. To run their business, they get financing from Islamic bank as linkage facility, but the bank's financing is bigger than their own capital. What do you think about it? Is it good for their business sustainability? Thank you.
Yeah, I think probably you're talking about cooperatives like Baitul Mal, which get funds from banks. But the bank's financing is bigger than their capital. That's how the banking business works, right? Most of the banks, their capital is relatively small. Um, any financial institution, they have a capital. For example, the Basel III requires capital holdings of maybe 15-16% now. So as long as they fulfill their regulatory requirements, even if they have 20% of the total, 20% capital, the remaining 80% comes from other sources. So in a bank, it comes from deposits. In cooperatives, you mentioned, it will come from other sources. So they have the capital maybe 20%, and 80% they can get it from other sources, including through the linkage program. So there's nothing wrong in terms of sustainability. The key issue here would be how do you manage your risks so that if there are losses, the capital is enough to sustain the losses. So the capital works as basically a cushion to sustain the losses. And if the banks and the financial institutions, they have enough capital to sustain the losses, in terms of sustainability and business model, I don't think there's anything wrong. That's how actually financial institutions operate.
Okay, thank you, Professor. Ladies and gentlemen, I see somebody who raised her hand. Will you ask questions directly to Professor Habib Ahmed? Oh, from Brother Firmansyah. Is Brother Firmansyah with us?
Yeah,
Okay.
Assalamualaikum, Prof. Habib Ahmed.
Walaikum salam.
Yeah, just in responding to the question that was just questioned by the sister Aulia just now, regarding to the linkage program financing that usually, because I'm also working in one of the Islamic bank in Indonesia, so usually we provide a linkage financing to the BMT or BPRS, the Islamic rural banks, understanding their financial needs. So how could you advise us as a Islamic commercial banks to leverage our existing strength to provide more financing or more accessible financing to the IMF? I mean, like, because this is as far as we can do, because it's like entering to some BMT also, it doesn't jive or it doesn't match with our risk acceptance criteria from the credit policy side. So maybe you have some kind of other instruments or advices for us in the Islamic banks to integrate other tools or maybe more strategic things for us to work on. Thank you. Jazakallah.
Well, that is that is a question which I've not thought about, but I think, as you rightly mentioned, when you're thinking of providing funds to other microfinance institutions, you have to cover your own risks, and you cannot be just giving out money to any microfinance institutions. I mean, I think most likely the answer is, which probably you're already doing in terms of assessing the financials of existing microfinance institutions, the performance, and assessing their credit risk as an organization, because you're providing them financing. I'm not sure if I have any other, of course, on top of my head, I cannot think of any other solution right now, but the obvious way which you are doing is that you have to assess the credit quality because you're making a decision and in terms of financing of the microfinance institution and their history, and then make a decision whether to provide them with funding. Again, as on top of my head, I have no other thing. I mean, I think the question requires thinking in terms of coming up with other strategies through which you can expand the linkage program and provide financing.
Okay, Professor, thank you. I think that's all for the Q&A session, Professor. Unfortunately, our agenda is very tight and we are apologies because we don't have enough time to have all questions answered. And thank you very much for all your answers, Professor. I believe what you have been explained has answered all the questions very clearly. Professor, we really appreciate the time, effort, and thought you have put for today. Please do stay on your screen for a second as we want to show you a small token of our gratitude. Please exhibit with our sincere gratitude.
Okay, thank you.
Okay, wait a second. Okay. Okay, before we close this session, is there anything else you would like to say, Professor? How about the assignment or the quiz or maybe a closing statement?
Not really. I wish all the students good luck, and I hope they have benefited from the presentation. I wish them all the best in the remaining of this winter course and their future studies.
Okay, thank you very much, Professor. Ladies and gentlemen, brother and sister, unfortunately, this is the end of our first lecture with Professor Habib Ahmed. Once again, we would like to express our gratitude to Professor Habib Ahmed for so generously sharing his valuable time, knowledge, and wisdom with us today. And we do apologize, Professor, if you find many inconvenience from us during your session.
Not at all. Assalamu alaikum. Thank you very much.
Waalaikumsalam. Ladies and gentlemen, don't forget that we still have our second lecture for today on the current issue in Islamic microfinance, which will be delivered by Dr. Mohammed Obaidullah. We will begin our second lecture at 6 past 30 minutes p.m. Western Indonesia time, or Ba'da Maghrib by Indonesia time. So hopefully all of participants can return again to virtual room 5 minutes before that. Wallahu alam. Let's close the session by saying hamdalah, alhamdulillahirrabbilalamin, and dua kifarah majlis. Subhanakallahumma wa bihamdika asyhadu an la ilaha illa anta astaghfiruka wa atubu ilaik. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam.
Waalaikumsalam. Thank you, Professor Habib Ahmed, for the insight and knowledge.
Thank you.
Jazakallahu khair, Professor Habib Ahmad.
Thank you.
Okay, I remind again to all participants who already here, please give a reminder to other participants in your group to join the event immediately. Thank you. Assalamualaikum, Dr. Obaidullah.
Waalaikumsalam.
Would you like to start now or wait for more participants to join?
As you suggest, sister, it's okay with me.
Okay, maybe better we will wait a few minutes. Okay, Bismillahirrahmanirrahim. We'll start now. Assalamualaikum warahmatullahi wabarakatuh. Peace be upon you. Alhamdulillahirabbil alamin. Allah still give us the opportunity to continue our agenda today. Ladies and gentlemen, we are going to listen to second lecture for today, on the challenge faced by Islamic microfinance today and how the solution. Our second lecture is a lead research economist at Islamic Research and Training Institute of the Islamic Development Bank Group, ISDB. According to his According to his LinkedIn account, he has served several international and national institutions of repute, creating and sharing knowledge in the field of Islamic economics and finance. And he is the author of the popular book Islamic Finance Service. He has specialization in finance and certification in microfinance, blockchain tech, digital money, fintech, and related areas. Among other things, he is the founder of IBFNet, the Islamic Business and Finance Network, and its flagship initiative, the International Institute of Islamic Business and Finance. Without further ado, ladies and gentlemen, brother and sister, please welcome Dr. Mohammed Obaidullah. Assalamualaikum, doctor. How do you do?
Walaikum salam, sister.
Okay, how do you do, doctor?
Alhamdulillah, I'm fine. Thank you very much.
We are very honored to have you with us today, doctor. Okay, before we continue, how do you want to have a Q&A session? Dr. Obaidullah, would you prefer having it during your presentation or would you rather having it at the end of your presentation?
I guess this all the, the presentation would be in the form of, slide presentation. So we can always revert to any slide if there is any specific question relating to any particular slide or any idea that is covered in a particular slide. So it would be good, in my opinion, if we just, if you address all the questions together at the end of my presentation. And yeah, I think we can take the questions at the end of the presentation. Unless there is any, very important reason to maybe stop somewhere. I'll be finishing my presentation in about 55 minutes to 1 hour as suggested by you, and then we can have about half an hour of question and answer session.
Okay, thank you, Professor. Ladies and gentlemen, as Dr. Obaidullah has said, all participants will be given the opportunity to ask questions after he has finished his presentation. To anyone who wants to ask some questions, you can leave your question via chat room, or you can use the raise hand feature on your screen, and then you can ask the lecturer directly after you allow to. It can be question related to what he will deliver today or question related to his area of expertise. Without further ado, let's immediately begin our second lecture. Dr. Obaidullah, the time and screen is yours.
Thank you, Sister Hafida, for giving me this opportunity to continue after a very useful session on Islamic microfinance by Dr. Habib Ahmed on the outreach and sustainability issues in Islamic microfinance. It was indeed a very good learning for all of us. Thank you very much, Dr. Habib, if you're there. Let me continue the line of discussion on Islamic microfinance. And I would be focusing more on the challenges and solutions of possible solutions, I would say, that many of the Islamic economists and microfinance professionals or practitioners, they have recommended. Prior to that, let us allow me to take you through very quickly the framework of Islamic microfinance and the different modes and models that are used in Islamic microfinance currently. And then we will take a look at what are the challenges and so on and so forth. Now, if we talk about Islamic microfinance framework, I think the various points that are before you very briefly capture the market wisdom as it relates to Islamic microfinance. The way microfinance has evolved, Islamic microfinance specifically, one can see this as a marriage between Islamic finance and microfinance. Interestingly, both these movements, if you can call it that way, they started almost around the same time in the 1970s, when the Islamic finance, the contemporary form of Islamic finance, as we understand, Islamic banking and insurance and takaful and investments and so on and so forth, it has evolved. It has evolved over time, over the last, I would say, about 4 or 5 decades. Though one cannot really trace the history of Islamic finance from 1970 onwards, because enough has been done in the various Islamic societies over the ages, especially with respect to the institution of zakat and awqaf. They're certainly not new institutions. Certainly, they didn't start in the 70s. But what I mean is the Islamic banking and finance movement, as we know now, the institutional framework that exists currently, the Islamic capital market that we're talking about now, it all started in the 1970s with the establishment of Islamic Development Bank and the Dubai Islamic Bank and so on and so forth. Those who have kept track of the evolution of Islamic banking, they would have known this, that initially we had the theoretical frameworks of Islamic banking, and then followed by practical experiments by certain establishment of certain Islamic banks, followed by the kafil companies, and followed by Islamic capital market mutual funds, then sukuk, and the evolution continues. Now we are talking about Islamic fintech and Islamic decentralized finance, Islamic DeFi, and so on and so forth. But when did microfinance start? Again, people have been trying to help the poor. There have been various models of microfinance which can be traced to the church, the faith-based charities. Many years ago, many decades ago, perhaps many centuries ago, people have been trying to help the poor. That has been, the agenda for most of the faith-based societies, and many of, for that matter, anybody who wants to, who tries to be benevolent, he can do this by trying to help the poor. Therefore, at different points in time through the ages, we have witnessed different experiments taking place. People have been trying to help the poor through creating their own indigenous small institutions, or individually they have been trying to help the poor. So certainly, one cannot say that poverty alleviation as an agenda started on the 70s. But what we are looking at is the birth of the industry. When we say microfinance industry, it all started with Grameen, as we all know, and as Dr. Habib explained in the first session, in a very elaborate manner. The Grameen model explained how the Dr. Yunus contributed to this, to the problem of collateral, to the problem of asymmetry of information, how these were tackled by Dr. Yunus' model of Grameen, or what we know as the Grameen model, based on group solidarity, based on sharing of risk within the group. And this is how the microfinance, so-called microfinance movement, it started in the 1970s, and then it has gone through various stages of reform. And in the reading material that I have shared with you, one of these, the articles that was published in Finance Times very lucidly captures the birth of the microfinance industry and how it went through what is called a mission drift, a drift in its original mission of helping the poor, and how the drive towards sustainability perhaps is partially responsible for this mission drift. And many of the conventional microfinance institutions, they started believing in certain practices which are not exactly meant to address the plight of the poorest of the poor. It was the concern about sustainability which basically served as a justification for this drift in mission, for this change in course. And one of the key issues with conventional microfinance from the standpoint of the consumer, from the standpoint of the person for whom it started out in the first place, which is the smallholder farmer or the poor man who doesn't have a way to earn his living, and he has his needs. So therefore, a lot of experiments were actually started, and they took the shape of different models of microfinance, and they tried to resolve this basic issue. But then they quickly, it was found that there were many problems. And one of the key problems is the pricing issue, the affordability issue. The product that we are offering, can you offer it at a price at which the poor can afford to buy this service, can borrow at this cost? Now, the usual argument, or rather the genuine, I would say, there's a lot of genuineness in this argument, that compared to traditional banking, and you had the banking rates. So the bank loan rates were compared to microfinance rates, and they were found to be astronomically high. So, but the justification was, and very rightly so, that the operational cost associated with a microfinance operation is going to be far higher than what is associated with the traditional banking operations. For two reasons. One is the way you operate, the way you try to take the service right to the doorstep of the poorest of the poor. So there is a huge amount of administrative cost there, a huge amount of monitoring cost there, and then you're also dealing with customers who are relatively riskier than your traditional customers who come to the bank and who have collateral to offer, and they don't belong to the poorest strata. They have productive enterprises, so obviously that brings down the credit risk. So as a compensation for the credit risk, and also to cover their high operational cost, most of these conventional microfinance institutions, they would charge a price which was considered to be often beyond the means of the poorest of the poor. As a result of that, studies after studies, they found that perhaps many of these conventional microfinance institutions, they are leaving out that particular strata in the society which they are meant to serve in the very first place. They were looking at bankable customers who are already, cannot be categorized as the poorest of the poor. Therefore, this concern led to a search for alternatives, and a similar mission drift. People were equally worried about another mission drift was taking place in the Islamic finance domain. Now, what we call as the mainstream Islamic finance was originally meant to address the problems of the poor. If you think in terms of the objectives of the Sharia, the very goal, the strategic goals of these institutions, the very ideals that Islamic economists were propagating when they were trying to make a case in favor of Islamic financial institutions, that was to serve the poor, that was financial inclusion, that was inclusive finance, which will provide financial solutions to all those people who are currently, and in a Sharia compliant way, of course, but they have to be included in the financial system in the first place. So this was not happening. And that was a concern in the Islamic mainstream banking and financial services industry as well. And so both kinds of mission drifts taking place in two movements, which started almost at the same time, the 1970s. There was a mission drift in both the spheres, in both the domains. Perhaps that is what led to Islamic economists to think in terms of solutions, and perhaps these kind of concerns are what led to the birth of Islamic microfinance. And various experiments were tried out, and there were standalone experiments. You cannot call them as a sector or a system, but they did, provide what we call proof of concept for Islamic microfinance. That yes, you can have an institution, Islamic microfinance institution, which can serve the poorest of the poor, provide financial services at an affordable price, and it will also provide for various other things that conventional microfinance was ignoring in the very first place. One of the another discomfort with conventional microfinance was that it would only focused on microcredit. And I will not repeat the model of Grameen that you discussed in the first session, that it focused only on the microcredit. And the theory of change assumed there was that you go on giving loans after loans, and the loan amount will increase over time as the person uses this loan for a productive enterprise and gives back the loan and then increase the loan. And the scale of his operation also keeps growing. At the end of the day, he comes out of poverty. And that is, we call this as the desired progress out of poverty. But this is not going to, whether it was happening or not, there was not much empirical evidence. Whether conventional microfinance helps the poor, brings them out of the poverty. Again, there is mixed evidence. The last word has not been said. But there was a growing discomfort. And some people would always were inclined to believe that at such high prices, it can never be a win-win situation for both the microfinance institution and also its client. So the microfinance institution was profitable. It was having low default rates or, default rates or very low credit risk. It had resolved that issue. And it was generating very good returns, which attracted more and more institutions to come into this particular sphere, increasing the scale, increasing the size of the market, and so on and so forth. It all happened because these institutions could generate profits. And these profits came out of cost plus, the plus component brought the profits. When they would price the product in such a way that all the cost is recovered and there is a risk premium, and then you have the profits. So these profits were there, and these profits were generated, and this is what led to two things. One is it meant an expansion in the conventional microfinance industry. More and more players started coming into this. There were microfinance funds which will invest in such microfinance operations because this was seen to be a case of wealth at the bottom of the pyramid. So there was wealth at the bottom of the pyramid, and that was something that you should strive for. That was the conventional wisdom. And you can do it using the Grameen model, you can use it to use the alternative models, village banking model. So, but you can resolve this issue. And when you resolve this issue, you are profitable, you are sustainable. But this also led to raised eyebrows. Many people would see this as a kind of exploitation of the poor. And empirical studies were not very, very conclusive on this issue, whether this was leading to, this was in the first place helping the poor or helping them to come after the poverty. There was mixed evidence. And there were studies which were funded by foundations, which will come up with very good conclusions that yes, there has been a phenomenal increase in the standard of living, the quality of their life, and so on and so forth. There were equally discomforting evidence coming from studies which were inconclusive, or which would even say that poor have become poorer because of being part of what is called a debt trap. So Islamic microfinance was offered as a possible solution. And it was right from the start, it was based on certain ideas and concepts which are rooted in the Islamic framework as we understand. The institutions that are the age-old institutions of Islamic philanthropy, charity, zakat, awqaf, sadaqah, and so on and so forth. So traditionally, they have always been viewed as the instruments for poverty alleviation. So Islamic microfinance institutions try to integrate these institutions with the microfinance models or the microfinance methodology that was popularized by some of these conventional institutions, and some of these were also indigenously developed. Then the second point that is unique to Islamic microfinance framework is its emphasis on economic empowerment. And how this economic empowerment is going to take place. Again, Islamic microfinance institutions would rely on hadith references, where the Prophet, peace be upon him, himself led from the front and showed the way how you can, how can guide a poor and take him out of poverty. And we all know the famous hadith of, this person coming to the Prophet seeking his advice, and the Prophet would ask him, what do you have in your home? He says, I've got this axe. Then the Prophet, peace be upon him, went on to auction this and raise some funds, asked him to take the money and use his part of it for his own expenses, and part of it, the wooden bowl he had, the wooden bowl was auctioned, and with that money, part of that was given to the poor guy, that you can use it for your personal expenditure, and part of that the Prophet would buy an axe, and he himself went to this, extent of fitting it with his own hands and giving it to him, that go to the jungle and cut wood, sell it in the marketplace. So he gave the complete business plan in that sense, that this is how you can make your living with whatever little means you have. You can try to, transform your asset into a productive asset, and then this productive asset can start giving you earning. Then you come and report back to me after a certain period of time. And this was observed that this was the methodology of economic empowerment that is captured in this very well-known hadith. I will not reproduce that hadith before you. I think many of us are aware of that. And those who are not, they can refer to some of our references on Islamic microfinance. And there is very elaborate way it tells you how you can go ahead with an economic empowerment program. So basically, what is the component that is unique here is hand-holding. That you have to hold the hands of the poor and guide him, give him the business plan. If he doesn't have the skill, tell him how to acquire the skill, or maybe you can fund the skill acquisition and give the business plan, give the business development services, show him the market, show him the way how to come out of the poverty. So this has to be part of a package which will have charity component and which can always have a microfinance component as well. So that is this is the these are certain points of differentiation of Islamic microfinance from the conventional microfinance, which was entirely focused on microcredit. Then you have the issue of transparency and accountability. In the very same hadith, we see how the Prophet, peace be upon him, is asking the poor companion to come back and report to him what he has done, basically how he has gone ahead with this project and how he has really whether this has contributed to his to improvement of his financial position or not. Then another very critical issue that differentiates Islamic microfinance from its conventional counterpart is the discouragement to debt. Debt is not forbidden in Islam. Of course, there are Islamic forms of debt, and you can do a murabaha, you can do a salam, that's a debt in kind, and you can, these are all halal ways to get financing. But at the same time, there are plenty of hadiths which very clearly indicate or point towards the need to avoid debt. Debt can be a recourse only as a last resort. On the other hand, we are looking at institutions, microfinance institutions, where the theory of change itself revolves around creation of debt. So you give a loan of X amount now, and he repays back, then give X plus Y. He repays, then give X plus Y plus Z. So the debt amount will keep on inflating. As a result of that, the financial institution also stands to benefit. It is making profit out of this debt. So it suits the conventional game very well. But if you're trying to replicate that in the Islamic framework, it's not going to work, because Islam discourages you from incurring debt. And if you have incurred debt for any reason, at the very first opportunity, you should get out of this debt. So if you have created a micro enterprise using debt capital, the moment this, you start generating profits, the first thing you do is repay your debt and then move on to equity, move on to other forms of financing. So avoidance of debt is something, a very key pillar of any Islamic scheme of helping the poor. Don't push him into a debt trap, as simple as that. Then you have the idea of cooperation and solidarity. Again, we are not looking at a possibility of doing this very project of poverty alleviation, let's say, or Islamic microfinance. There has to be it has to be rooted in the idea of cooperation and solidarity. And there are many, again, hadiths which basically tell us that the entire ummah is like a one body, and if there is one part of it suffers, then that entire body suffers. So Solidarity is an idea that is key to the Islamic society, and therefore, any idea of institution building, again, there is a clear encouragement to a structure which is based on cooperation and solidarity. Now, you can have a profit maximizing structure, a joint stock company to help the poor, but then that is not the ideal kind of thing. So that is permissible, but that's not ideal way to structure your organization. So if you're looking at cooperation or benevolence, again, those institutional frame designs, like ONCAF, for example, which is rooted in benevolence, that should be the recommended way to do things. If you're talking about best practice, then it should include those structures which are rooted in cooperation and solidarity. And in fact, some of the conventional models also, in a way, they use this very idea. When we talk about mutual, guarantees or solidarity, even the Grameen model, there is a kind of, if you look at within that group, the typical Grameen borrowing group, you'll find there is a kind of solidarity within that. Many times, they would, for example, we are a group and we have borrowed some money for cattle breeding. And let's say I am the person who is the last in the line, and I get the money, and I have purchased cattle, and one of the cattle dies, and I'm unable to pay. The rest of the, let's say, for 5 members in the group or 4 members in the group, they see that because of him, we are going to lose. We will not be able to get our loans. So let us help him. Let us help him out. Let us, buy his cattle, and let us help him to repay his loan, so that we are also not affected. So in a way, whether that is rooted in self-interest or rooted in, but there is some kind of a cooperative, venture that is going on, and that is happening because this is designed as a group-based model. So any idea of a group, any idea of solidarity within the group, any idea of cooperation does find a recommended place in the Islamic scheme of poverty alleviation through microfinance. And then another point of contention, I would say, on which Dr. Habib also touched upon this issue, that is the family cohesiveness, which is one of the desired ideals of Maqasid al-Sharia. If you talk about protection and, let's say, nourishment of the family, or the progeny, or the nasl, then of course, family becomes a very critical economic unit, and its wealth or its well-being becomes a critical concern. But if due to any policy decision or any strategy that is being done at a macro level, if it leads to some kind of a disharmony within the family, and which would be a natural outcome, I would say, various sociologists have also pointed that if you are extending support or let's say financing, excluding certain types of members, let's say the male member is excluded, and only the women are there getting the financing, then this is also an exclusion of a different kind, which should be avoided. This is what many of the Islamic microfinance institutions have been trying to do, and they have been trying to target the family and not just the woman member in the family. And finally, the contracts have to be free from riba and gharar, as we know. They have to be Sharia compliant. The end is fine, but the means also has to be, compliant with the Sharia. Now, these are the various modes. I will not get into details of that. I presume that you are already familiar with this. We are almost at the last session, so I presume this is what you have before you. I would just like to make one point, that you can see the diversity in the modes. Or not-for-profit also, you have zakat, awqaf, qardiyah sana, kafala, while there's various kinds of mechanisms that are available. Similarly, if you're talking about for-profit, you can have a salam-based microfinance, you can have istisna-based microfinance, or you can have mudara, which is output sharing-based microfinance. You name it, and you have this wide range of wide diversity in the modes that you can use. And in the question and answer session, if time permits, now I'm trying to move faster and faster, just to be able to complete my presentation in time. And then, if time permits, we can discuss the examples, real-life examples of microfinance institutions which have been using these various forms of, various modes. The fact remains that Murabaha remains the most popular, but at the same time, we do find Islamic microfinance institutions which go beyond Murabaha, which have also been using Ijara, Micro Ijara, or Micro Salam, or Micro Musharaka, and so on and so forth. We'll see at a later stage. Now, these are the, I'll just try to summarize the overall scenario. If you look at various Islamic microfinance models, broadly, one can categorize them into two types. One is, we had these conventional microfinance models, and you find Islamic replications of that, which basically try to bring in the Islamic product, substitute the Islamic product for the conventional loan, or which is interest-based, riba-based, and hence it has no place in the Islamic scheme. So you just take out the loan, riba-based loan, and replace it with BAMAJL or BBA or any other Islamic product. So only the product is replaced. The model remains same, whether it is the Grameen model or whether it is the self-help group model popular in India, whether village banking model experimented in different in the Middle East and elsewhere. You have the credit union model, Islamic credit unions in Sri Lanka, Roscars in Sub-Saharan Africa, Islamic pawning very popular in Southeast Asia. These are the range of models that were existing in the conventional microfinance domain. They were also used in the Islamic domain just by replacing the product, or just by taking out the riba element that was inherent in the structure. What are they had certain benefits because they're already existing, and many of these models were very simple, they were transparent, and there are many development agencies which had already designed standardized procedures and documents, and so it was very easy to start a Grameen replication because the model is already there, and there are people to train you in that. There are documented good practices, so it was easy to replicate, and therefore all we do is just replace the basic Grameen loan for the RDS IBBL by margin. So the only difference is that the interest rate is now no longer in the equation, or the conventional loan is not in the equation. A BAMAJL financing takes place. Everything else remains same. So it is that much easy to replicate. And but then they had their usual problems, or the problems with conventional microfinance when they were replicating the Islamic sphere. Many of these problems they remained. What were these problems? We just discussed that there was an overwhelming concentration of Murabaha. Why? Because Murabaha is an Islamic product which comes the closest to a conventional law. So if you are a Grameen manager, microfinance manager, then you'll be most comfortable with trying out Murabaha. You will not like to touch, Musharaka with a stick because you have done that all through your career and you are comfortable with the conventional laws. So therefore, those replications that were tried in the Islamic domain, they replicated the entire model. And the product also, we just push the product from the non-compliant domain to the compliant domain, that is Murabaha. And then, of course, they suffered from many other problems, unlike the other models, other modes that would focus on project viability, the sharing-based models. Here, because you are focusing on Murabaha, of course, there is less emphasis, like the conventional microcredit-based models on project viability. And similarly, they were not for the poorest of the poor. The cost of finance was very high. One-only approach, which again went against the Islamic wisdom of looking at family as an integrated whole. And then it led to perpetuation of debt. Though we call it Islamic debt, Sharia compliant debt, but debt is debt at the end of the day. A conventional debt perhaps compounds at a much faster rate. Here, a Murabaha debt, once it is fixed, the debt amount, the quantum of debt is fixed once for all. So in the compounding of debt, or I would say the growth of debt, of course, a conventional debt causes far greater harm than the Islamic debt. But both lead to a perpetuation or concentration of rate-based mechanisms. On the other hand, we had these indigenous Islamic models. We can club all of them together. Many of these are not even recognized by some of the surveys that have been done. I can tell you about two publications which were done by SIGAP, which has done a phenomenal job of collating and documenting good practices in the microfinance. But again, for what Dr. Habib explained as scale effectiveness, many of these funds were not very effective in terms of scale. In terms of number, they were very high, like Qard Hasana funds in Iran, thousands of Qard Hasana funds. There are many different estimates, 6,000, 7,000, 8,000. Similarly, we have different estimates for the Baitul Mal Tamwils in thousands spread across Indonesia. And we have Zakat funds spread across India and elsewhere, Pakistan, the South Asian countries. But many of these, they served, if you try to measure the scale effectiveness, in terms of numbers, they were very large, but in terms of the people served per unit, they would compare, they will come nowhere close to an Islamic bank or a conventional bank, because a bank operates at a very, very large scale, and they will come nowhere close to the rural banks. So obviously the scale effectiveness was not there, but it doesn't mean that they were not existing or they were not doing a good job. So in terms of the numbers they were serving per unit, and in terms of their importance in the landscape, they were certainly very important, and they were indigenously developed models. They didn't mimic the existing models. They were born out of thinking and concern by indigenous people, by the local people, and these are, you can call it local models or indigenously developed models. And sometimes some of them were funded through Zakat funds, some of them were funded through Waqaf, and some of them were composite, as we should see very quickly. So the goodness about these models here was that they try to, like the example that you just discussed, I will not repeat the elements of that, you already have discussed, but what kind of models they led to? They led to institutionalization of charity. That yes, charity, Islamic charity, can be seen as a sustainable source of funding. Now, this is something that goes against conventional wisdom about charity. Conventional wisdom always looked at charity as a random kind of flow, and this is the reason why charity was never recommended to cover operational cost or the recurring kind of expenditure. It was meant for capacity building and such other one-time events. Whereas in the Islamic framework, you find the Islamic charity is very different. You have an idea of sustainability built into it. If you're talking about zakat, then there is a certain amount of seasonality about that, but it is an annual levy, and you can see the annual flow of zakat are going to be there, and you can depend on that as an institution, as a source of funding. Similarly, if you're talking about waqf also, if it's a cash waqf, they're invested in, very prudently, they are a source of sustainable funding to you. Therefore, this could be used for your microfinance operations. So this is what the Islamic indigenous models, they taught to the rest of the world, that you can look at charity, Islamic charity, as a sustainable way of funding. So it helped institutionalize charity and good giving. And also the Akhwat kind of models, they helped institutionalization of volunteerism. You can actually depend on volunteers to systematically reduce your cost. If I may add a few additional information about Akhwat, its entire top management, or a major part of it, works on the principles of volunteerism. 1/3, according to one estimate, of the entire workforce of Akhwat, they do not take salaries. So if you can do it year after year, and Akhwat started sometime around 1996, and we are in 2020, so you have 1/4 of a century long history of sustainable microfinance that is funded through charity, and that recovers part of its 1/3 up to 1/3 of its cost, more than that, through volunteerism, and which has continued to ensure that you can lend at 0% cost. Because your own beneficiaries who progress out of poverty, they can contribute charity to you, and their funds alone can meet a very large percentage of your costs. And then, because of you have a very large number of modes now available, also in this indigenous Islamic models, many of them, they tried to use multiple types of products, leading to diverse structures. And their examples are many. You have the Sudanese micro examples. Again, I can share some of you, those who are interested, some literature on that. There are composite structures which use multiple models. And there are like Wasil type organizations in Pakistan who have, gone beyond Murabaha, used Ijara, used Salam, and Salam has also been used in other places in Sudan, for example. So there has been, good cases of microfinance institutions which have been using multiple range of products. Unlike the replications which would use a Sharia compliant version of a convention law. And then of course they had this built-in features of safety net, skill enhancement, business development services. And if time permits, we'll discuss some of the IDB models they use this. And of course they look at family empowerment. But yes, not all the indigenous Islamic models, we can only talk about the good ones, but there are also a very large number of poorly managed Islamic microfinance institutions, zakat institutions. They are dotted across the globe, and where you have a great degree of lack of transparency, very poor accountability and governance structures, and very poor documentation of the good practices and bad practices, they multiply. Because of that, many of these Islamic models, in spite of being good examples, they have not led to large-scale replications. But things are changing for the better. And as we move towards, documentation of good practices, and we're trying to replicate in both zakat sectors, awqaf sectors, and so on and so forth, then we can look for better, possibilities. Okay, so this is what you have before you is an example of a composite structure where you have zakat, awqaf, and also the Sharia compliant for-profit means, modes of Islamic finance. You can actually bring all of them together. A given microfinance institution can actually use part of it. It doesn't have to operate, use all those mechanisms that are available. But this particular model actually tells you the possibilities. How you can use zakat funds for skills training, for meeting the safety net, meeting the basic necessities of the poor, and you can also use zakat fund to create a guarantee fund, and all that for the economic active individuals. And with skills training, you can push them into the category of economically active group. And once they become economically active, then you can use your Sharia compliant products, whether it is micro takaful or for-profit microfinance lending, by module or micro lease, and micro jara, and so on and so forth. And waqf can be of physical or cash, and they can be used for skills training. They can be used for actual microfinance operations as well. Yeah, what many of the Islamic microfinance institutions recently they have gone for composite models. Composite models means they also use zakat, they also use cash waqf, but they also use for-profit halal Sharia compliant modes that are available. The beauty of this, or the advantage with this, is that they combine the access, sustainability, and affordability considerations. You can bring in the charity component to absorb certain amount of cost, make the prices affordable, and at the same time you have the for-profit mechanisms to ensure that your corporate starts growing and you are investing your funds, whether it is on an output sharing basis, or whether it's musharaka, or whether it's mudaraba, you're sharing the profits and revenues, and so on and so forth. So you have the mission-based approach combined with market-based instruments, and you can always decide on what is the best fit for us, the given situation of instruments and modes. And you can be very flexible in your pricing and in your product design. But then there are certain, certain question marks as well with composite models. That when you're talking about a very composite structure, then there is a possibility that you are looking at different types of capital. You're looking at corporation capital, you're looking at charity capital, you're looking at return-seeking, profit-seeking capital. And this can also be two types. Let's say in awqaf, it seeks modest profit. It doesn't seek very high profit. So you have modest profit-seeking capital, you have profit-maximizing capital. So when you combine all of them together, then there is a possibility that you may not be able to do your job in the best possible way because of conflicts that might creep in, because of conflicting organizational culture. A credit-focused organization, its staff would, the culture would be very different from a charity-focused organization. So this is for all of us. We see that in our day-to-day lives. So when you combine them together, then of course it's not going to be very, very efficient. But if you try to integrate them, it's not going to be very, very efficient unless your governance structures are in place. You have very carefully calculated, estimated the risks and the way they are shared between different stakeholders, and only an equitable risk sharing structure can ensure that your structure is going to sustain in the long run. Otherwise, it will lead to conflicts. It will lead to organizational, conflict situations, and which might sort of jeopardize the purpose for which the model exists. Now, this is perhaps the last slide, and I'll end my presentation with that. What are some of the key requirements for this? If we're looking at zakat, we're looking at awqaf, we're looking at for-profit Islamic finance. Now, if you look into any particular country, and if you look around the Muslim world, you will find the institutions of zakat and awqaf. There are different government organs which look after these these institutions. When we talk about for-profit financing, again, you have different government entities which look after that. Now, coordination of that can be very, very challenging, especially when there are dedicated ministries for awqaf, dedicated ministries for zakat. So depending on which ministry is looking after this particular instruments, now bringing all of them together as boards and institutions within a particular organizational structure is highly challenging. So there is a need to integrate these different policies, which might, in some countries, can be very, very isolated or de-linked from each other. So you need to link all these indigenous institutions, who are depending on different sources of funds, and also to link them with the formal financial system. In most of the countries, I would say the cooperatives, they come under a very different kind of, I would say the supervisory structure. The Ministry of Cooperatives in most of the countries that looks after the cooperatives. Zakat and awqaf in most of the countries, you have the Ministry of Religious Affairs. Whereas for-profit finance, it comes under the Ministry of Finance, or the central bank. In some countries, they look after these issues. So therefore, to bring them together is one Herculean task, and it's not, it requires a lot of political will. This has been attempted in many countries, including Indonesia, with perhaps highest degree of success. But there are many other countries which still have very, very isolated, I would say, structures, isolated funding structures, zakat, awqaf, or profit. So to bring them together, you need the right kind of policies, you need the right kind of regulations. Thank you very much. I'll end my presentation here. Inshallah, then we'll go to the question and answer session.
Okay. Thank you very much to Dr. Obaidullah. What we have delivered really gave us insight about several challenges faced by Islamic microfinance and how should microfinance meet this challenge. Okay, we are very fortunate to have listened to your presentation today. May Allah bless you, Dr. Obaidullah. And now let's continue to Q&A session, Doctor.
Yes.
Okay, ladies and gentlemen, for this Q&A sessions, I will give all participants an opportunity to ask Dr. Obaidullah directly. Now we have one question from Sister Amanda. Sister Amanda, will you ask directly to Dr. Obaidullah?
Okay.
Okay.
Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam.
as we know that the one of the main issue that we face in the Islamic microfinance is about the source of fund. Is the, I I curious, is there any program or any action that ISDB done for this issue? Thank you.
Can I answer this question? Then we can go to the next question one by one, inshallah. Yeah, Islamic Development Bank, in fact, has a very, very active Islamic microfinance program. And of course, a couple of years back, or till very recently, many of the Islamic microfinance operations by Islamic Development Bank, they were scattered across its different organs or different components. Most of the Islamic microfinance operations was undertaken by the Department of Agriculture, and they did some of the finest examples of agri-based Islamic microfinance. In the IDB member countries, especially the ones that come to my mind are in Sub-Saharan Africa, Sudan, Guinea. They had basically they would be helping farmers acquire land or basically take possession of land, either on a Ijara basis from the landowners, and then the groups would be formed and they will get into cultivation of some cash crops like olive, for example, and which would have a very good market price, which could fetch a good market price. And this land acquisition would also, over time, initially there would be Jara, but basically it would follow an overall structure of diminishing musharaka with the bank. So the bank will, over the years, allow the farmers to initially take the, from the Jara rentals that they would be paying, they would also contribute part of that to acquire a stake in the land. So over the years, the ownership of the land would pass on to the hands of the smallholder farmers. And then there would be, it was all part of a big value chain. IDB has always followed a value chain approach to Islamic microfinance. So it doesn't stop at giving microcredit, or it doesn't stop at giving microcredit or another handful of services. They have always tried to complete the value chain or help the intended beneficiaries, the poor, in every possible way, right from the beginning of the value chain till the product, to grow the product, and till the point when it is sold in international markets after proper packaging and after proper marketing. So once you take care of the entire value chain, that calls for a lot of, I would say, handholding, a lot of non-profit seeking funding. You cannot have for-profit mechanisms in place here. IDB has used, of course, for-profit mechanisms, but only within part of a bigger, larger value chain. And if you look at the other components of the value chain, of course, these are non-profit, or they are based on one-time grants, one-time support, whether it is for taking care of the basic necessities or whether it is to acquire some basic skills. So these have all preceded and they're all integrated with the microfinance operations. So, and IDB has not hesitated to look at Islamic philanthropy. And one of the earliest examples where IDB tied up with an international body, which is a development body, which is UNDP to be very precise, they embarked on a program called DEEP, or disadvantaged economic empowerment program. So this program was started way back in the 90s, and in fact, beginning of the century, I would say, when they were also thinking in terms of having a waqf in place, though that component could not materialize. But they did have components which will provide basic necessities to the beneficiaries. It was this program was implemented in Palestine, and where business development associates, there was a network was developed to help the poor to identify economically productive activities, to engage in them, and to the BDAs or the business development associates would also help them to market their products. So this value chain approach was used, I would say, across the board, and in almost all the IDB initiatives. And in fact, with the Nobel Prize in Peace going to Dr. Yunus and Grameen becoming very, very popular, Dr. Yunus was also invited to IDB to see the possibility of perhaps how we can replicate the Grameen model. Can we Islamize the Grameen model? And IDB also interacted with BRAC, which is Finance Plus model, where you not only give financial services, not only you give loans, Islamic otherwise, you also provide many non-financial services. And these non-financial services would not be provided at the market prices, but they will be provided as a support to the beneficiaries. And overall on the package, this was the BRAC approach, which was also widely celebrated along with the Grameen approach. But BRAC approach is known as Finance Plus or Finance, they later on, they love to call it Finance Multiplier approach, which was seen to be closer to the Islamic scheme of poverty alleviation, which basically leads to economic empowerment, and which also seeks to provide many of the support services which the poor woman in the household, if you're financing her, she may not have any idea about how best to raise a poultry, for example. You can always finance, give a loan for purchasing poultry or even a Muraba financing, Sharia compliant one, but then there are many risks in the business of poultry. So unless she's aware of that, and you don't provide any support services of access to, let's say, medicine for poultry-related diseases and so on and so forth, then these micro enterprises are likely to end up in failures. So BRAC had this mechanism of providing a whole range of services in addition to microcredit. And that is why IDB went for a replication of the BRAC model in Sudan, and which is one of the success stories in IDB, where they basically Islamized the product instead of conventional loans or interest-bearing loans. IDB went for Muraba kind of financing, but this Muraba was not like a purely market-based Muraba, where IDB could, or the microfinance, the project agency that was created by IDB, it would get many other benefits in addition to. It was not a simple Muraba operation. It could get bulk discounts, for example, if you're, let's say, financing a dressmaking unit by, let's say, 100 women, then of course you can give the other kind of support. You can give them the related skills for making dresses which will fetch good prices in the market, or giving them advice as towards a kind of fashion or dresses which are in fashion, which command high premium and so on and so forth. At the same time, when you buy the machines or give them on lease, and you can always negotiate much better, much more effectively with the vendors, whether they supply of machines or supply of raw materials or whatever. So these benefits were also passed on, and that was why in IDB we used to call our microfinance. If it was Muraba, we will call it Smart Muraba, because it is not just Muraba alone, but there is a smartness element, an additional value there, which will basically make it bring more value for the beneficiaries. Similarly, if you're talking about Musharaka, it was a smart Musharaka for IDB, because it will lead to ultimately, if you're talking about diminishing Musharaka, it will lead to ownership of the land by the farmers. So this was the brand, I would say. It's not exactly an official brand, but in the documentation and all, you'll find a mention of this Smart Muraba and Smart Musharaka, which is kind of popularized by the IDB method of microfinance. Next question, please.
Okay, next questions from Brother Rifaldi Majid. Assalamualaikum, Rifaldi Majid. Brother, will you ask to Dr. Obaidullah directly?
Waalaikumsalam warahmatullahi wabarakatuh. Assalamualaikum warahmatullahi wabarakatuh. Doctor, thank you for the opportunity that is given to me. My name is Majid from Erlangga University, Indonesia, and this is insightful presentation from Dr. Obaidullah. And my question is, based on your opinion, is it possible to Islamic microfinance institution issue sukuk for the micro level in order to raise fund from the society and donate to society too, especially in the pandemic COVID day. Thank you, Dr. Assalamualaikum warahmatullahi wabarakatuh.
Walaikum assalam warahmatullah. Yeah, I mean, there is no Islamic microfinance. The fact remains that it has not been integrated with the Islamic capital market well enough till date. That's a status of the industry, the status of the sector, that we have not seen cases of Islamic microfinance institutions going for, let's say, securitization or sukuk issues and so on and so forth. Grameen has got certain examples. If you look into the Grameen's history, you'll find cases of securitization taking place. Now, the securitization of receivables or the loan is that much easier in the conventional sphere because the loans are somewhat standardized. They're not so in the case of Islamic microfinance. And you can have the tenors will be different, and you have a variety of modes that are being used. So Islamic microfinance has additional challenges when it comes to securitization. But at the same time, if you're talking about issuing a sukuk and creating a fund, let's say, and the fund issues sukuk and raises funds, and with a clear mandate that these funds are going to be invested in Islamic microfinance operations, then of course you have a clear possibility there that it can be done. You can create an Islamic microfinance fund because Islamic microfinance at the end of the day is if you are focusing on certain, I would say, part of the market which can provide, let's say, profits comparable to the market returns, then you can always provide marketable or market comparable returns as well on Islamic microfinance fund. But then the job is not very well done because you are only addressing a certain segment of the market, like the conventional ones, the ones who are not so poor, the enterprises that would be financed, they're already in the profit-making mode, and you are merely sharing their profits. And when we are talking about, again, profit sharing, if you're looking at the Islamic modes, if you try to share profit right at the operations level, it is going to be much more complex. And again, as my predecessor, Dr. Habib, underlined several times, that bookkeeping is a major issue there. That the small businesses, they tend not to keep proper books of accounts. They tend to mix personal capital with the organizational capital and so on and so forth. So you need to have a lot more investment of time and resources on capacity building before you can look at those products. But yes, I think that was not your question. Your question was very direct, and that whether we can use sukuk to fund Islamic microfinance. The answer is a resounding yes. Because you can always, depending on the nature of the sukuk, of course, you can target certain segments of the Islamic microfinance market. For example, if you're talking about a cash linked sukuk, like the one we had to finance infrastructure, but you can have one to finance microfinance operations where the expectation of the capital contributor, who is the waqif in this case, is not governed by the market considerations. He's equally happy with below market returns because the returns are not going to come to him. He's not going to share in the returns. He has contributed his waqf capital, and he's happy if they are going to be invested in a certain way, which will generate, let's say, below market returns. Returns would be positive, but it would be below market. So you don't have to really target those microfinance operations which give you market comparable returns. You can always look for below market returns, or those enterprises you can finance which are not, which are funded by, let's say, the people who are just coming out of poverty and where the returns are not very high, but still you can generate those returns. So both are possible, whether it is a work-based sukuk or whether it is a sukuk as we understand in the mainstream market. Both are possibilities for raising capital or creating an Islamic microfinance fund. Thank you.
Okay, thank you, Doctor. And then next we have questions from Brother Komardin. Assalamualaikum, Brother Komardin. Will you ask directly to the doctor? Okay, maybe he is not with us now. I will help to read the questions. Assalamualaikum, Doctor. Oh, yeah, Mr. Komardin is with us now. Hello. Okay, it's okay. I will read for you. Okay, the questions are, the first, how is IDB helping the poor in attaining education and entrepreneurship skill in tackling poverty and economic deprivation? And the second one is, if IBS don't utilize IMF model with their client, how do they generate profit? Thank you.
Yeah, if I may, I believe the question about IDB is a fairly broad one, because we're talking about an organization whose mission is to help the poor, whose mission is to ensure that its member countries they move on in the path towards achieving the SDGs, the Sustainable Development Goals, which includes education, better education, which includes better healthcare, which includes provision of water, sanitation, and which includes better inclusive cities, and so on and so forth. So we have these 17 SDGs that also IDB tries to help its member countries move on the path towards achieving these SDGs. So if you look into the website of IDB or any of its annual reports or its various documents, you will find plenty of examples of how it has helped the education sector, how it has helped the healthcare sector, and how it has helped the poor, sought to help the poor through microfinance, and also the rejuvenation of the Qaf sector and also the Zakat sector. So I'll need perhaps several sessions to if I line up all the achievements of IDB in terms of these and try to, but this is the kind of information that is easily available. So I don't have perhaps the need to restate them. If you access any of the IDB portals, any of its documents, you will get plenty of information on IDB's various activities, programs, projects with respect to education, with respect to healthcare, poverty alleviation, and so on and so forth. Thank you.
Okay, thank you, Doctor, for the answer. And then we have question from Brother Asep Maulana. Maybe I will read the questions because the time is limit. Okay. Assalamualaikum, Dr. Obaidullah. Thanks for the insight. As we know that during COVID-19, Islamic microfinance is very bad. I would like to ask what solution is offered by ISDB to save this Islamic microfinance. Thank you.
Sorry, I couldn't hear the last part. Could you just repeat it, the question once again? Post-COVID-19, what was the question?
Okay. During COVID-19, Islamic microfinance is very bad. I would like to ask what solution is offered by ISDB to save this Islamic microfinance. Thank you.
Again, that's a fairly broad question that the IDB and YC member countries they have come up with their own strategies to help the member countries in terms of how to overcome the pandemic-related crisis situations. And again, there are detailed strategies. Okay? Part of the strategy is very, very immediate, which basically helping the member nations to meet with their healthcare-related crisis-like situations, and provision of medicines, provision of other support services, and let's say makeshift hospitals, and so on and so forth. So these are of very immediate nature. And of course, Islamic microfinance has nothing to do here, but these come as direct support from IDB, from its different entities and different departments. They've been trying to play a role here. To what extent immediate services can be provided. Beyond that, if you talk about Islamic microfinance, perhaps, or economic empowerment, that is something that looks at beyond the immediate needs. Once the signs of recovery start, or let's say the shutdowns they stop, and people are allowed or freedom to move and freedom to engage in their productive activities. And of course, one thing that comes to my mind right away is the agricultural sector is relatively free from the shutdowns. And across the globe, you'll find those agriculture-dominated countries. They have continued to allow their farmers and to go to the fields, to continue with the farming practices and so on. So, but for the initial few days of recovery from the shock, the initial shock that every policymaker that got after the pandemic and the shutdowns were announced, but beyond the initial shock, most of the countries, they liberalized, allowed their farmers to move to the fields and continue with their various economic activities. Similarly, small businesses, to the extent that they're not in the very crowded cities, they have opened up also in many of the member countries. They're back to their earlier, if not the same level, but back to work. So Islamic microfinance can certainly, these activities could be resumed, and I don't see a change in course or change in direction there. You have to have make people economically resilient to such shocks. This is what has come out of the pandemic, perhaps, that how resilient you are. Many categories of people have been found to be more vulnerable to such shocks than others. For example, the salaried class, the middle class, salaried class. There have been many surveys, and people have found how many days of savings you have. If you lose your job, how many days you can sustain. And very, I would say, discomforting results have come up. Some say that, okay, if it continues beyond 2 months or 3 months, then you are entering a very serious phase in your life where you'll have to literally, look for external sources of support to take care of your basic necessities. So these are difficult times, and of course, from the standpoint of, I have seen certain publications from Islamic microfinance practitioners, which try to see the problem from the standpoint of the Islamic microfinance institution. Of course, the microfinance institutions like banks and financial institutions bad debts rising phenomenally, and the quality of their portfolio nosediving drastically. So these are all possibilities, and they're looking forward to support from the government, from the central bank, or from in various forms, some kind of bailout from the predicament that they face. Islamic microfinance institutions also face a similar situation. There are going to be more bad debts there compared to earlier times. There are going to be more write-offs and so on and so forth. Less number of people will come to seek to start new enterprises because business sentiments have been affected. But at the end of the day, life has to come back to its normal. Maybe it is a new normal, but it has to come back to normal. And I don't see a major change in the way that you have been functioning so far. other than taking note of such instantaneous or quick shocks. So there has to be a very clear, I would say, recognition of this, and accordingly, the strategies have to be tweaked to make the overall the institution more resilient towards this kind of shocks in future. Thank
you. Okay, thank you for the answer, Mr. Dr. Obaidullah. Okay, we have next questions from Sister Luliatul Mutmainah. Assalamualaikum, Professor. I'm Luli from Indonesia. Thanks for great presentation that give us many explanation. As we know that the lack of transparency and governance is one of big issues in IMF, is there any IMF core principle that have been implemented in any country? As we know that nowadays Zakat and Wakaf have core principle. Thank you.
Yes, Sister, you are absolutely right on dot there. That we have the Zakat and Wakaf core principles developed, and Indonesia has taken the lead there. And of course, things have to move in stages, in phases. And we started out with Zakat, and we have now moved on to Waqf. And for Zakat, not only the core principles are in place, but technical documents have also been prepared to take out take care of important dimensions like risk management. And similarly, our AMIL governance, for example. Similarly, for Waqf, the core principles are already in place. When it comes to Islamic microfinance, again, if you talk about best practices or any documentation of core principles, for conventional microfinance, the answer is yes. We have the CGAP working on this as a coordinating body, as an apex body for quite a long time. If you visit the website of CGAP, you'll find plenty of literature there which deals with good and bad practices in the conventional microfinance field, and how you can actually trace how conventional microfinance has learned from the good practices, has learned to avoid the bad practices, which is why we moved from microcredit to microfinance, which includes the entire array of financial services other than credit. And then you also see the best practices developed by CGAP, and also you have the other agencies like Axion and others who have also been contributing to this in terms of documenting good practices, which is why we have the smart microfinance principles now, where affordability is clearly recognized as one of the principles, or designing a product which is not a one size fits all, that you have one microcredit product which basically you're offering it to the client, take it or leave it. It's not that. You have to develop a product considering the needs of your beneficiaries. For example, if you're talking about farmers and who is engaged in a particular kind of cultivation, then you have to very carefully assess when and how much funds are required and in what way you can contribute to his farming and can address his financing needs. So products have to be designed keeping in mind the needs. Similarly, pricing has to be done so that it is affordable for the intended beneficiary. If the people you are targeting, they cannot use it, they find it too high, obviously the job is not done properly. So these were actually they came to be known as the smart microfinance principles, which is basically focuses on the client, which is the poor farmer or the poor trader here, or the poor person on the streets. So a clear focus on client is sought to be captured in these principles. So in the conventional sphere, yes, the literature has been evolving over time, and people have been learning from the experiences, from the bad practices, or from the so-called mission drifts, and they're learning how to do it better. In Islamic microfinance also, there is learning going on, but I'm afraid it's not being done in a very formal way. In IDB, we have been there was some attempt some time back, and the output of that you can see in the form of two specific documents. I was talking to you about smart murabaha and smart, musharaka. These are all documented. The IDB experiences have been documented. But as of now, these are primarily for the use of in-house use of IDB. IDB's own, they have tried to document what they have learned from their own experiences in these documents. For if you're talking about a global scale, we still don't have a global body which is working on this and which is trying to make it available to the rest of the Islamic microfinance sector. And it's high time, I feel, that such a body should come into place. Thank you.
Okay, thank you, Doctor, for the answer. And then next we have Brother Rizida Gabasofa. This is maybe the last questions. Assalamualaikum, dear Dr. Obaidullah. Thank you very much. Thank you very much for your insightful presentation. Does ISDB also monitor the situation with Islamic microfinance in Muslim minority countries? Is there any success story? Thank you.
Yes, the answer is yes, and a resounding yes. IDB has been trying to document the good practices in the rest of the world, and they're trying to learn wherever there is a possibility to learn from the experience of others, from their own experience. And I can just tell you one thing, that Islamic microfinance is a big thing in IDB. Most of its operations, somehow or other, they are geared towards economic empowerment, and they're geared towards achievement of the SDGs. Sometimes they are packaged differently, like healthcare related programs or poverty related, or let's say education related programs. Sometimes they're clearly aimed to create jobs for the youth. Sometimes they're geared to finance the farmers. So there could be a single program could have a more specific or a narrower objective, but they all form part of a broader canvas, which is to ensure that the member countries and the rest of the Muslim societies, predominantly Muslim societies in the non-member countries, they benefit from this knowledge, and they all move along the path of ensuring the well-being of their people. And SDGs are seen to be a means towards achieving this objective. And they're also seen to be aligned in many ways with the Maqasid al-Sharia.
Okay, thank you for the answer. Okay, I think that's all for the Q&A sessions, Dr. Obaidullah. Thank you very much for all your answer, Doctor. I believe what you've been explained has answered all the questions very clearly. Unfortunately, our time is limited, and we are apologies because we don't have enough time to have all questions answered. Dr. Obaidullah, we would like to show you a token of our appreciation for the time, effort, and thought you have put into today. Please look at your screen for a second, Dr. Obaidullah, okay? And please accept it with our sincere gratitude.
Thank you very much, sister. Thank you very much.
Okay, before we close all our agenda today, is there anything else you would like to say, Dr. Obaidullah, maybe about the assignment or the quiz, or would you like to say a closing statement?
Thank you, sister. Just that I would like to place on record my deep sense of appreciation that you gave me a chance to come and interact, make me a part of the Winter School initiative. And this is an initiative that's of tremendous value to my mind. This is one way to disseminate your accumulated knowledge with the rest of the world. And this year it has been all the more enjoyable because we are all, we no longer, we are insisting on physical presence, but in a virtual space, people are able to participate from different parts of the world. And I congratulate all of them for today's the last day, or maybe the penultimate day. Very soon you'll be completing this course, and I'm sure all of you have benefited from this. And Good luck to all of you. Thank you very much.
Okay, thank you very much for Dr. Obaidullah. Ladies and gentlemen, brother and sister, Alhamdulillah, all our agenda today has come to an end. We would like to express our gratitude to all our distinguished lecturer for today, Professor Habib Ahmed and Dr. Obaidullah, who have shared their valuable time, knowledge, and wisdom to us. We will also like to express our gratitude to all of participants who have attended all lectures today until the end. May Allah bless us all. We also would like to ask your forgive as you may find many inconvenience from us and especially from me as a master of ceremony. Before we close, we would like to inform all participants that we will start earlier for tomorrow on 3 past 30 minutes p.m. Western Indonesia time. As the last session of this program, tomorrow we are going to have a virtual industrial visit from Tegalwaru Business Tourism Village and Cibuluh Batik Village. And after that, we are also going to have a closing ceremony to end the entire session of 2020 Winter Course program. Therefore, it is hoped that all participants can attend early for tomorrow's agenda. And please kindly check your account at the website ocv.ipb.ac.id using your username and password for the assignment, pretest, and post-test. Thus, this is the end of our agenda today. Let's close by saying Alhamdulillah. Alhamdulillahirrabbilalamin. Doa kifarah majelis. Subhanakallahumma wa bihamdika. Asyhadu an la ilaha illa anta. Astaghfiruka wa atubu ilaik. Wallahu alam. Wassalamualaikum warahmatullahi wabarakatuh.
Assalamualaikum. Jazakallahu khair.
Jazakallah khair, Dr. Obaidullah.